interest rates. However, of course, she did make these remarks before Powell made his remarks early today, where he was notably dovish. So it will be interesting to see if she has changed her tune at all to go more in line with the chair, or if she sticks to her views. She did say yesterday. To be aware of trade official. WTO dispute panel backs Indonesia in complaint regarding countervaluing duties imposed by EU imports of biodiesel.
Good morning, everybody. A little more trickle in here. Good morning, good morning. All right. How's everyone doing? It's been a minute.
Just making you aware, Hamak starts her remarks on CNBC.
It's been a minute. It's been a minute. All right, welcome in.
And Hamak notes, try not to focus too much on markets beyond economic implications.
We're going to start off here today. Wrong little thing here. There we go. There we go. Good morning, everybody. What's up, Maria, Juan, Only Trades, Bo,
And a bit further here from Hamak does note heard
everyone
Chair
from
Powell
Twitch,
is open-minded
Nova,
about
Doppler,
policy
AA.
outlook.
Yeah, it's
That's
been a
Hamak
minute.
saying she heard Chair Powell is open-minded about policy outlook.
It's been a minute since I've been live. We are going to look at just kind of the reaction, which I'm sure everyone knows is very bullish. Yeah, if you're in the Discord, hopefully you saw some of those trade ideas trickle through.
And unemployment to rise.
A lot of them are up. A lot of stocks are up today. In fact, if we just go to the S&P 500 heat map, it's pretty green across the screen other than
and she needs to maintain a modestly restrictive stance of policy to get inflation back to target.
Got 84 advancing stocks, 18 declining stocks
She's
right now.
being asked about the last job report where we saw the notable revision. She does note she tries not to take too much from just one report.
Got Fed talk going on in the background is what we're hearing right now. All right, so I want to call out a couple levels. First and foremost, I'm looking at NQ over here on my right-hand side. And you can see price from the original speech. Oops. Very bullish, right? And you can see here we pulled into its VWAP one time, again, and since that point, we're just putting in higher lows and price action is getting very, very coiled up here. So there's going to be either a breaking point where we break out further and start to try to reach up, like say, for example, S&P 500 to the 6,500, or we're kind of going to get hung up. Now, I'm pointing this out because when you look at this from a risk to reward standpoint, the move has been made. Right, there's been the bulk of the mood has been made today, right?
Just been asked
there's no denying that.
Still maintains her view that if the decision was tomorrow.
I'm gonna go ahead and mute that. My thought here, based off of gamma levels, based off of a caller, based off of some other stuff that I'll share with you here, it looks like we're probably going to get hung up right and around this area. This is where we had prior supply hit in. This is where the JPM caller is at, the upper bounds of it. They did move it up to like 65.05, like 25 points higher. But as I've said in the prior video, I don't really care about adjusting it. I care about what hit the tape, when it hit the tape, because when things like this hit the tape, it's a big move and algorithms kick in, people adjust, people make moves, hedging activity takes place. So I just kept it where it's at. And, it worked out good for me, despite, hearing everybody, no, they switched it. They moved it up. It's more of a zone anyway, right? So it's more of a zone. And 6,500 still remains to be that more concentrated level from a gamma perspective. That is the call wall. So if I show you over here, net gamma, that 6,500 is this gigantic wall here. So when you get into these levels, they can act as resistance. They can act as pins. If they go through them and traders don't continue to reach out further, you can see them come right back through. Now, besides that 6,500, we got 6,475 and then 6,450 beneath us. Slightly beneath us as far as 6,475 goes. We're at 6,477. So we're basically trading right in and around here as it stands. Now, from a 1 DTE point of view, we got 6,475, which is the main area of concentration, which we're at, or we're slightly above. And then 6,500 has been growing dramatically in size. So I still think that is the target for today. I would say pay attention to that 6,500. That is seemingly where the market is trying to make it to. And this has been growing throughout the day. If I look at market net flow, the flow of the market's been incredibly bullish, right? The green line's been going up. The red line's been going down. We've had convergence. There's no denying that this is a very bullish day. So if you're trying to fight the market by shorting it, you're going to constantly feel out of battle, right? I get that it's extended already. The easy money has been made. So you can do like quick scalps here and there. But overall, if you're trying to short this, I feel like it's more of a struggle than anything, where you can have much better days where it's a lot easier to try to apply shorts. Now, from a swing trading perspective, from a swing trading perspective, a lot of the names, especially with the trade ideas, which we can go over individual names, we can have them typed in the chat. We can go over whatever names you want to go over. A lot of them are doing good, right? Because it's a very full breadth type of day. We're getting like small caps to really lead out. Like if IWM is up 4% today, well outside of its weekly, monthly implied move now. It was kind of consolidating, flagging, pulling in, and bam, we saw another ramp up here. ITB, home construction. Look at this thing. This thing is up 6% almost. That's insane move. We have consumer discretionary, nice big bullish move over here. It looks like it's about to press into new highs for the year. Materials also breaking out of a very tight consolidation over here. Nice move. Technology, right? Making a little bit of a recovery. What is it overall doing though? It's been kind of going sideways. Financials breaking to new highs this today. We have energy, which is a lot of the names in the energy sector have been coiling up very tight. So I did start getting some energy names in my portfolio, some of which I shared in the trade ideas. I didn't share specifics, but the ones that I shared, I have a couple of those names. I'll go over those. I can go over those later. And then we have communication services, XLC, not too far from a new high. But I mean, if we close where we're at right now, that would be a new closing high for that. Healthcare has also been showing some relative strength, getting a little bit more bullish. However, it's been on a pretty nice run up. So seeing some consolidation in the near future and then maybe trying to approach it that way, which makes me think about biotech. Biotech is also broke out of a nice consolidation, consolidated again, and boom, we broke out a little bit higher today. But overall for the year, we're kind of just flat, right? It dealt with the volatility with everything else, and it's made slowly climb back to higher lows. So getting through these levels, it could be pretty positive for biotech. We got ITA, which is aerospace defense. This thing has been pretty darn strong. No complaints there. RTX is a name that I've kind of eyed on, and this one's also been just kind of consolidating here sideways. Slightly flat on the day though, so it's not showing the strength that you'd want to see on a day like this. Utilities kind of just going sideways overall today, and then consumer staples came slightly up, but kind of just sideways. So very risk on type of day. We can look at like Bitcoin. I'll use Bitcoin futures, and Bitcoin futures saw a nice pop today as well. One of the names that were the higher beta in the tight list, as well as the trade ideas, was Mara, one of which I have a position for. You can see it kind of came in here pretty tightly, and I was noticing some pretty decent volume kind of trickle in, and it was pulling into a prior area where we saw bounces from. Prior resistance could become more support, and we saw a nice little pop there. So a lot of the names that I took from a swing trading perspective, the point for this is I look for names that are tightening up, and when they start to break out like this, I want to see them continue, right? And in order to do that, I want to make sure that I update my stops, right? From maybe down here to up here to the low of today's trading session. Because if it turns all the way back around and comes out, I'm not that interested. I'd rather be break even on the position and re-enter versus it go significantly against me. And when you're breaking out of a contraction, my goal is to have it expand and expand fast and furious, and then update my stops, take some profits. Because for me, I want to make the most amount of money, right? The most amount of money in the shortest amount of time, right? And then I want to get out and then protect my capital once again, right? If I'm in cash, my capital, my nest egg is a lot safer. So when I see these tight consolidations, it just lets me know that, hey, if it expands in my direction, I can make money quickly. And if it breaks down, I know how to get out really quickly, right? Good call on Neo. Yeah, Neo was Neo. I didn't take Neo, but yeah, that was a really good looking chart. Look at that thing. I wish I did take it. Yeah, this was flagging and kind of saw a nice pop up higher, came back in a little bit, but yeah, overall this thing was a monster. I can't remember when I posted this in trade ideas, but so the reason why I posted something like Neo was you get this big move, right? On strong volume, and then it was coming in, and you just kind of see volume dry up a little bit here, right? And it was kind of going sideways, flagging, and that to me looked really good. And a lot of these like Chinese equities were looking pretty strong, and no idea that an expansion like this was going to happen. But if you just play the breakout, let's just say from up here, I mean, it's up 32% in total. So very, very nice move here on NEO. Hey, what's up, Vincent? Good morning. Hey, by the way, Vinny, I got to respond to your message. Sorry I haven't yet, but I will. Okay, what else do we got here? We got Jimmy, what's up? 99, what's up? Quick question. Where on Think or Swim can I find the British narrator? Oh, so on Think or Swim, if you want to have that background noise, go to chat rooms. You click chat rooms. Chat rooms is going to pop open. It's going to look like this. And then you hit global news. When you hit global news, you can click live, or sorry, listen. And when you listen to it, it'll allow you to kind of hear a live news feed. It might be slightly delayed. I'm not 100% positive, but I'm pretty sure it's live. It's free, right? If you have Think or Swim, I was paying like $400 or $500 a month for a very fast news feed, basically for my live streams, just so people can have it. But yeah, I was like, dude, this is the cost of like a brand new car, basically. It helped me make money, believe it or not, within the cannabis sector, because it got news out to me before the market reacted. So it made sense to that extent, but I was like, it's just not, I don't really need it personally. I didn't need it. So this works great. What's up, Amar? What's up, Uni? Joel? It is live. Thanks, Alpha. Yeah, I wasn't 100% positive.
Fed's Cook is currently, she said she has no further comment about mortgage controversy beyond her prior statement.
Okay. Still very bullish market net flow here. The convergence is waning a little bit. That makes sense because when you have a very bullish market net flow, but SPY or the market is not moving, you're gonna lose convergence and then kind of go through that consolidation period, which we're kind of doing right now. We did come into that JPM collar. This is that, and I drew out a red rectangle, just, not necessarily to mean, hey, short up here, but this is kind of the area where I'd say, okay, we could probably slow down a little bit and consolidate. That would make sense. Let me go ahead and open up NQ here too. Yeah, we're really not doing anything. We're just going sideways. Okay, so I think it's a great time to pull up some individual names, some individual stocks. So if you want to look at some individual names, look at some various setups, maybe we can run even a few scans. I've been working on this new scan, and it has been like a hitter. It's been crazy. So yeah, it's been finding it. I don't know what I'm going to call it yet. I don't even really need to call it anything, but I don't know how to do it on any other software other than Think or Swim. And it's basically like looking at this kind of a fractal view of the market, right? It's a fractal way of looking at individual equities. And it just is very good at finding names that are contracting. So a lot of the trade ideas that I've been posting are coming directly from
the White House via CNBC. The White House do note they welcome this move by Canada, which is long overdue, and they look forward to continuing their discussions with Canada on the administration's trade and national security concerns.
Phase. Yeah, let's look at some of these.
Response there from the White House on Canada.
XPEV, DJ, yeah, Lily. Oh yeah, Trump is going to speak soon. That is very correct. Yeah, that is correct. If anybody has news on that and just link it, I can try to pull that. But yeah, I think he said it was like 1 o'clock or something, but that's Eastern Standard Time, or no? Okay. Burke, look at this. What a move. Birkenstock breaking out of that tight consolidation. That was there in the trade ideas. This one looked great. Unfortunately, I was at the gym early this morning at like 6, and I knew that I was going to miss a lot of the names that I posted. So I was kind of like, and I was like, part of me was like, man, I'm not going to listen really to full Jerome's speech. And then, I'm going to miss a lot of these. And I was thinking about putting some limits on. So buy stop orders. And I was like, you know what? It is what it is. Sometimes I just need to just follow my gut and just do what I want to do. And today was one of those days where, I look back, I'm like, oh, it would have been great to enter, but I already had a lot of exposure in the market going into today's trading session. This looks great. APD, this one, look at this breakout. Bam, a very tight consolidation. This one we posted last night. Nice breakout. These are just the start. So if you are looking like, I could technically do a smaller position, enter in, and then just have a stop loss at the low of the day, or even down here, and then target higher levels. I like to be, like, I don't want to hold through periods of pullbacks and consolidations to get up here necessarily. But, you know, if it's a small position, it's not going to really wane on me all too much. Oxy was one of the energy names that were coiling up incredibly tight. That looked great. And then LEU, I took a position in. This is a higher beta name, but very, very kind of like tight wedge formation. And today also broke out. I think that this would fall within that energy kind of space too. A lot of the energy names were contracting and breaking out. DVN, right? So breaking out today. A couple other kind of higher beta names, PCT, Pure Cycle Technologies. This one pulled in quite a bit. Another high beta name, right? And it kind of broke trend today. So it's an okay move, 2.86%. It's not like keeping up with, you know, IWM or anything, but still, you know, maybe if this thing were to come back up to test these highs at some point, that's 32%. That's pretty crazy. So you don't go too heavy on these type of positions. You don't need big positions because when they work great. And when they don't work and you have too big of a position, they can destroy you. So risk, reward, balance it. Okay. Okay, I'm going to pull up some of these names now as we have some coming in. We'll look at Tesla. In order to look at Tesla, though, we do need to hop into the Tesla vehicle. So we're going to go ahead and hop into our Tesla vehicle. So Tesla, these were the earnings expected move. I want to move these out of the way. Oops. Yeah, so Tesla looks like it can do some damage here. It's looking pretty strong. We contracted, right? We coiled up, we broke out, we came to back test, and now we're seeing some strength following through. Right? So ideally, if you're in Tesla, you don't want like a level down here to be breached, which is 313, right? This low. You don't want that to be breached. Ultimately, I mean, you could technically say like, I don't want to get under 300, but that's, 35 points lower. So you just got to kind of take into consideration. So that's about a 10% move, right? So, and it's $36 a share. So keep in mind, if you're like, I'm going to give it room to breathe, this would be the risk, $37 per share or 10%, which in a high beta name like this, that makes total sense. But if your risk is that far away, and you want to feel comfortable with what you lose, make sure that, hey, I'm okay with losing $37 a share, right? To make potentially, I mean, we can see this pop up to 400 in a matter of a couple of days. That's how fast Tesla moves. When you get these gamma squeezes that kick in, you see these things like completely fly high. So really structure kind of the risk to reward. Now, if you went tighter, it'll allow you to maybe increase the position size, but also when you increase that position size, you also have to take into account that you have a higher probability of getting stopped out the closer your stop is to entry. Okay? So there's give and take, and that's okay, right? That's okay. If you have a higher probability stop, right, you can technically lower your position if you want to, but if you want to keep it because you want a high position, because if it expands in your direction, you can make money faster, you can reduce your position, move to break even, and so forth. So there are gives and takes in each. You just want to kind of know what works best for your personality type. A lot of personality types, right, that'll fall within a bad hole are the ones that go a little bit too heavy, too fast. So then they're looking at it too frequently. They want to get out. They want to take profits too fast. They move their stop too quick. They don't follow through on a plan. And that's all fine and dandy. But you can really trip yourself up in those situations without having kind of like some sort of a foundation of a plan. So for right now, if I were to say I have a position in Tesla, I have to look at it. It's not of size, but I think I played the breakout here with a stop down here. So I'm going to have to update mine. So my thought simply being that it's a smaller position and maybe I want to add to it. If I add to it, I'm going to have a stop probably placed at the low of today or this low right here. Okay. And then the ideal move, I would want to see this thing come retest at the 360 and even go further to 400. But I would be taking profits if the size of the position grows as the price moves higher. You kind of have to adjust a little bit because you don't want it to be too heavy of a weight in your portfolio and have a day that it goes down 10%, because then it'll obviously affect you. So you got to just kind of balance it as personally you see fit. And there's no, I mean, there's always a wrong way to do something and a right way to do something, but you got to do what works best for you in those situations. So overall, if I'm just looking at this from a technical standpoint, we contracted, we broke out, we back tested, we're moving forward. We do have higher lows. That's positive. It looks good. I mean, it looks fine right now. Overall, when I zoom out and I look at other stocks versus Tesla, it's not doing nearly as well. Nearly. So that means one of two things. If the market's going full bull mode, this has to play some catch up, right? Which the market has been in full bull mode. But because if you look at the SPY, this is at new highs today, new all-time highs. Tesla, far away. Far away. But for Tesla, I mean, shoot, it can get up there in like a month, right? We know because Tesla moves like crazy when we have gamma squeezes. But that's, where you got to go 45% up to reach to another high. And maybe this is the start of it. Maybe it's a start here. And if that's the case, yeah, cool. Apple. I'm going to go over some of these other names too here, okay? Apple was one that we were saying this one has to play catch up if the market's going to move. And I mean, kind of look at it. It looks kind of like Tesla. And look how Apple had this kind of gamma squeeze out through here. Right? It's far off of its highs, but all of a sudden, boom, we saw this kind of big pop higher. It's technically clean, but still, I mean, it came up into this area, tightened up, had a little bit of a shakeout, and then ripped higher. These shakeouts can be nasty. But overall, with even something like Apple, look at this volume that came in. I forget what news this was, but there was something that drove this, or earning. It wasn't earnings. It was some sort of news because the earnings was weak. The earnings was fine. It actually started up higher than closed lower, but a lot of stocks did. But this move right here, look at the volume. And then the pullback here, consolidation, right? All on low volume. So Apple also, I mean, it doesn't look weak, right? Meta, I have a little position in Meta on this pullback. This one didn't come to fill any sort of gap over here on earnings, but we pulled in. I mean, overall, it's just kind of consolidating. Not too far of its highs. NVIDIA, right? Not too far of its all-time highs. Saw some pretty big volatility there those last few days. And we have earnings around the corner. So Tesla versus all these mega caps, for the most part, is the laggard. So, it has to play catch up. Or if these ones start to take a back seat, maybe Tesla, they rotate into Tesla, and we just start to see rotations in and out of, various sectors, various names. Okay. RGTI. Rigetti. This one's just I would consider this kind of like a Darvis box. I had a Darvis box, Nicholas Darvis. If you haven't seen how I made $2 million in the stock market, or whatever the name of the title is, I think he has a few books. Read it. It's a good book. I think I listened to it via audio, but I would consider this kind of just a box, right? A little consolidation sideways. We're at the lower range here. So yeah, come back up here, maybe tighten up and then eventually break. You see the higher lows. Yeah, it's fine. It's a higher beta name, right? These are higher beta names. But if we're in like a full bull mode where you're going to see a lot of these quantum, right, AI type of names still have a kind of some movement. Yeah, these are names you can get behind. Just you got to have an idea for a stop. So if I were to go along here, I'm not really interested if it breaks down through this kind of zone in here, right? If it breaks down, I'd be like, all right, I'm out, right? And then if it wants to go down and come back up and eventually turn back up, maybe I'd be more interested on a comeback through. But right now, it's just nice little consolidation there, right? Time to buy a home gym. I always thought about that, but I'm not good with home gyms. I've never been, I need to be like with people. I don't just go to the gym and work out. I typically do the classes with, other people, strength workout, strength and conditioning. And then kind of within the community there. So yeah, it keeps me going. I'm not on my phone, right? We're all working out. We're all like racing to the finish, basically. Shorter bursts. We do strength, then we do the conditioning part. We do warm-ups. Keeps me more focused. Oh, I'm in my Tesla still. You guys got to check me, man. Remind me. All right, Rigetti. Crocs. Not my favorite. Not my favorite here. You had a pretty bearish earnings move, and now we're seeing kind of a nice move up with the markets.
Deutsche Bank does expect the Fed to cut rates by 25 basis points in September and December. That's against their prior forecast of only December. So Deutsche Bank does upgrade their forecast to see the Fed cutting in September and December now, versus their prior forecast of just December.
So as far as Crocs go, yeah, I mean, we just recently broke to new lows, and we're seeing a little bit of a reflexive bounce. Could be considered a bear flag. Maybe it goes to fill the gap, but we're also running into this prior resistance. So I'm not a huge fan of these setups. I'm sure as heck not going to short it because we've seen what these names can do when they're in a bull market. They go absolutely crazy. It's just, do I want to add this as far as a piece of inventory in my portfolio? And it would be definitely lower on the list, lower position size if that was the case. Not to say that we can't, right? Crank up higher. Back up to this range, 24%, comes right back in kind of that value area where price is traded back around. Sure. But where's your stop going to go? Maybe right here? Okay. So then just map it out. But yeah, I just typically, when I see this, I pretty much just move on to the next name, and then that's it. And if I can find a better setup to add to my inventory, I'll do that. Hood. But you got to understand, my style is different than other people's, right? So those type of styles can work really well. Like I was looking at UNH right over here, and I started building a position, and I was trading around all of this. Like every time it went down, I was pretty excited because it was a small position, right? And then on an update or on strong down days, I added to it, and then I sold into it on any sort of up move. And then I re-added, and then I sold, and then before you know it, I'm up 30% in UNH, while everyone's like making fun of the bulls. Like, oh, everybody who bought over here is down. Like, not me. I started over here, and I was able to manage and trade around that. But also, when it comes to UNH, we're talking a massive company. It's not like a shoe company like Crocs, right? This is a big company. So I was doing it around, a mega, or I don't know if it's a mega, but a large cap, very large cap company. One of the big movers in the Dow. Okay. Did you look at COP yet? I didn't, but I can look up COP. COP. COP's looking good. Yep. This was on the tight list or trade idea. Overall, this one's still contracting. I think we were looking at like a little tight consolidation. It broke. No, that's not really a breakdown. That just came down to the lower bounds of this overall bigger piece. And we're still kind of bumping our head over here around 100. So I don't think that this is really a full breakout by any means. But if you're an early entry type of person, which I like to do early entries, it's the early entry of this kind of tighter wedge within a larger contraction pattern. If we can get through 100, that opens the door to test 105 pretty quickly. But overall, pretty good. I don't have the position in COP. I did end up taking one in Oxy and LEU. So I do have a position in both of those. And I think I just took Oxy mainly because one, the consolidation was just insanely tight. But two, I think I leaned more on this because there's a lot more like prestige around this name because Warren Buffett has a position or had a position in it, right? So I figured there'd be a lot more eyeballs on a name like Oxy. Is it Oxy? I think it's Oxy. I could be getting confused, but that was kind of in my head there. But overall, like ultimately that doesn't matter to me, but I do like that tight consolidation. And then LEU, I like the beta of this position because it showed very strong move, and we've been kind of taking a big toll. So I thought, hey, if energy starts to do catch a bid, maybe this higher beta name could kind of play out a little bit. There's a little bit of thought process, and both of which were tightening, but just kind of in a different type of formation of tightness. Thanks, Maria. What's up, Sneaky Man? Check out NNE. All right, we'll pull up NNE. WBD is a new position that I think will be really good for long-term swing. WBD, I'll take a look at that. I can look at SoFi too. NNE, a little choppy and sloppy, right? This is a little bit all over the place. But when these names, these nuclear names, start to play out, you get very strong moves. So you really kind of got a smaller positions, wider stop sort of ordeal, so you don't get shaken out. But these are like story names, and by story name I mean it gets a lot of attention because of what's going on in the sector, and then you look at these high beta names, and then it gets all of the attention. So there's these stories kind of built around them that could turn out to be big and powerful, right? Years later, we don't know what it can turn into, but that's what kind of really drives the flow, gets the excitement, things expand. So when things tighten up, right? If I'm looking at this, right, we expanded to the downside, we tightened up, we expanded to the downside. So now maybe a back test up into here, but then I still would need to see it consolidate. So if I just enter a position now, like I don't know what to do with it other than if I go long, I'm gonna have a stop down here and maybe up to here. Well, I'd have to be a little bit more aggressive on it, because it's not like it's breaking out by any means. It would be going to back test something that broke down. So a little bit more difficult situation for me on something like NNE, at least at this moment. You play Battlefield 6? No, I haven't. How is it though? Because I was told to download it and I haven't yet. I really only like playing Fortnite. I've tried getting on with a buddy that I met through here, through YouTube, and where we always play now. But he likes Call of Duty, and I just haven't. I can't get in. I tried, but I'm like, dude, I can't play this game. Like it's just not my style. But Battlefield, I will say, was one of my favorite games on the computer growing up, especially at like the LAN parties that me and my friends would have throughout high school. We would have LAN parties, bring our old like CRT monitors, hunk them in, dude. Be all excited that we built our own computers. Oh, I got a ViewSonic. The colors are so deep and the blacks are so black. And I love playing Battlefield. Like I loved it because you can fly like planes. You can like drive around. You can blow we would blow cars up and they would fly through it was fun. It was fun. Call of Duty requires too much memory. Yeah, I don't even know. I don't have it on my computer. I play on Xbox now, right? I haven't played a computer game for a minute because I don't have a PC. I have a Mac, and you can't really play anything on Mac that I know of, at least. But Fortnite, yeah, I don't know. I just like it. It's fun. You guys can tag me on Twitter if you ever want to play. Tag me on Twitter, and let me know. I have it on my desk, so I hop on frequently because a lot of the times it helps me break away from like the computer screens, the trading, and I'll just play the game because it's a little bit of a distraction. So I play pretty frequently when I can, at least. You play on PS5? Nice. Hey, what's up, JTI? Okay, OKTA, yeah, we'll look at that. OKTA, did I talk about Hood? I don't think I talked about Hood, so let's go back to Hood. Hood. Looking for more of a consolidation with Hood. Very, very strong. It's still like one of these leaders in this bull market, right? Strong, but we're kind of like going through a little bit of distribution, a little bit of consolidation. It's getting a little bit of loose, right? It was very, like, okay, this is very important to watch for, right? Because markets move between 4 stages, right? Accumulation, markup, distribution, decline, and then again. And this is fractal, right? You can have smaller time frames upon smaller time frames doing the same thing, upon smaller time frames doing the same thing, and so forth. But this would be a markup phase in the shorter time frame on a daily. And then right now, this could be an accumulation, right? Or it could be distribution. And the reason I say that is because look at how the candles were smaller, and it was, pretty nice on the way up, very good, small, like hardly any pullbacks or consolidations. And now we're getting to consolidation, but it's a little bit loose and a little bit sloppy. And this is where people tend to get shaken out of positions. They get freaked out, right? And a lot of the times what happens here is they go through these larger distributions or periods of accumulation a little bit more shaky, and then they take their next leg higher after shaking a bunch of people out. But you got to just be aware that, hey, if it starts consolidating like this and it does break down, those people that got out could be very well right, and it comes back down to kind of just take a little bit more of a breather before maybe making its next leg. So right now it's kind of in that area where I would need to see it contract. I would need to see it tight. Now, if you've been in this for a while and you're here right now, like you're a stone's throw away from all-time highs, like you're doing fine. Like you probably don't need to worry about this position at all. And if anything, you could say like, okay, well, if I'm in it, maybe I'll update my stop to this low, right? And if it breaks this low, I'll call it quits. And if it comes back around, maybe I'll re-add to my position or so forth. So it's strong, like it's doing good right now, right? I mean, look at the weekly time frame. That's pretty wild. It's pretty crazy. Came down to the 10-week, which is about the 50-day moving average. Yeah, you see the MACD kind of curling around a little bit. The histogram's kind of pointing down. It was straight up for like 9 weeks, even more probably. So yeah, it's gonna have to take some take a little bit of a breather, right? And that doesn't mean we can't pop to 130, 150, and then even like that, right? Boom, 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 boom. All that's possible. But yeah, I would like to see it tighten up. Okay. Yeah, I think I did mention Hood, but I don't think I pulled it. Maybe I did do the analysis already. I don't even know. Oklo. We'll pull up Oklo, and I got a couple of people here in Discord or in Twitch also asking about some names here too. So Oklo. So this one is kind of like NNE, right? Very similar, and this one a little bit more technically clean, right? You can see we consolidated sideways. I don't know if I traded this, but I was eyeballing it at least. And then we broke out, a little bit of more of a pullback, and then another clean kind of pullback here before breaking out. Not an easy thing to hold on to here because you have these little shakeouts, these 2-3 day shakeouts. But now what are we doing? Well, we're kind of getting here, pulling back in a little bit, and we're breaking from these highs. So ultimately, if you're in a position or a new position, you wouldn't want this low, right, about 60 to be broken. And if it breaks, right, and turns back around, you can always kind of re-enter. I call this like a little U-turn or a back-through trade. Another professional trader, Lance, I'm going to butcher his last name. Lance calls it right side of V. I think his is like a little bit kind of different approach, but yeah, a U-turn trade back through and so forth. Like don't worry about getting stopped out because you can always re-enter trades. Where the damage occurs is if you hold on and it keeps dropping. From experience, from what I understand, from what I know, what I've seen is, you can do really good. You can get like 90% win rate, but yet you take on one bad trade and you let it get out of hand, that can take away a lot of your performance. And from what I've seen, a lot of traders, it's typical that I go like, hey, look through your performance, right? Look at your performance and take out your 3 worst trades of the year. So if you go back to your last year's performance, you say, if I didn't make these 3 trades, or if I got out at a proper time, what would your performance change, right? Say if you were flat on the year, okay, maybe you were slightly down, but if you remove the 3 worst trades, where would you be? If it's all of a sudden like I'm up 15, 20, 30% on the year, you know your problem, right? You know your problem. It's up here.
Himself.
It's holding on to the losers and not moving on from them. Neo AM, hey, first time chatter. We did talk about Neo. This was on the trade ideas. I'm assuming because you're a first time chatter, you obviously don't know. But yes, Neo was, we were kind of talking about it down here after the big run up and the consolidation. But now if you're new and you're just like, hey, maybe this thing could go to like $10 or $20. Yeah, sure. Maybe we can squeeze higher, but entering up here is a dangerous game. And the reason I say it's a dangerous game to enter up at these high levels from a daily swing trading basis, right? Short term, right? If I go into the short term stuff, maybe you can look at it and see if it consolidates, play breakouts like this. But from a swing trading basis, you can easily gap down and be like at the center here and be down 50 cents per share, and that's, 5-6% or whatever. So I like to look for the consolidations. If you don't know, consolidations, and I like to play the breakouts. Boom. Right? Contraction leads to expansion. So all patterns to some extent, bull flags, right? Wedges, triangles, pennants, I mean, head and shoulder patterns, I guess, in a way, right? All patterns, to some extent, they all go through periods of expansion and contraction. The contraction portion is where breakout traders come into play, or speculative breakout traders. I've kind of put myself in a more of a speculative space where I like to enter small pilot positions, and if it breaks out, maybe add to it. But yeah, so big breakout, big volume, looks pretty strong. But if you enter up here, you're going to have to probably deal with some consolidations and, time going sideways, right? Down here would have been great. And it was great, right? We talked about it down here. We talked about it down here, I think. I can't remember. I'd have to post it. I'd have to pull it up. Let me look at it. So you guys know that I'm just not like making it up. Yeah, it was on August 7th, right? August 7th, we talked about NEO. Like over here. It's hard to see. Zoomy. There we go. August 7th, right? It was flagging like that. So August 7th was right here. Yeah, right here. Cool. I did not trade it. WBD, Warner Brothers.
A bit further here from Carney, it does note Canada will retain tariffs on steel, aluminium and autos as they work intensively with the US to resolve the issues there.
NQ, by the way, right now is slipping under the Powell VWAP that we originally got this big movement from. So I'd be a little bit more cautious as we break under this for NQ, right? For NQ, you want to see this kind of recoup it. So look at how it's kind of coming in right here.
To address current trade challenges,
pop around, trade around, but you don't want it to. You don't want to really to break significantly through that. But we are under it as it stands right now, and this is also taking place where right in that red zone that we were talking about, how we can potentially see it cool off a little bit. Where can we cool off to? Maybe you want to eyeball that 64.75 as far as the overhead. 6,500 obviously shrunk there in size accordingly to when you compare it to 64.75. That was growing in size. And then there's just a lot of exposure up here. So maybe on the low end, 64.35. That's right here. If we were to pull back here, I think people would be pretty freaked out. But that would be about halfway through this big bulky candle. And maybe that right there can set up for a shorter term intraday trade from a kind of a what's called perspective. So we're watching this break right now. This is only 30-second time frame, so it's, be aware of that. And when we see these big breaks, what I like to do here, which I'll get into some more stocks, but now we're getting some price action. I like to pull up the tick chart and just kind of see if it's a strong, full kind of capitulatory type move where we can go to like minus 1,000. And right now it's not showing that by any means, but I will have my trade station open in the meantime, just in case if I want to execute. If I execute, it'll be small. It would be like 1 MNQ. It's going to be tiny. And if I were to on this range down here, probably play it back up to like the VWAP from Fed. That's typically safe. It's kind of already bouncing there now. So I'm not going to enter right now by any means. But I would like to see more of an extension downwards. But that right there, look, you see kind of how it kind of expanded, right? Boom, right? So these make for some good scalps. But for me right now, I guess I got to just kind of pause and just wait it out. Is what it is. Ticks are about 256, so they're still positive. Give it some time. Maybe this was coming from some of the Fed speak. Okay, as far as SPY goes too, I want to call out the daily implied move for the SPY. We did break through the daily implications, and one of the main levels that we wanted to focus on, if we see these big breaks, is the next level, which would be the 2 standard deviation move. The 2 standard deviation move was at 640, 647. Now, if you think of this in terms of a distribution curve, right, 68% of the time, we're going to go for one of these daily implied moves. We did. We got there. We went through it. 2 standard deviation move, right? 95% of the time we close within that. Okay, 95% of the time we close within it. And I say close within that because I think for the 2 sigma, I like to think of it in terms of that. When I think of the 1 standard deviation move, not only 68% of the time, sometimes higher with the S&P 500, we'll close within it, but I think we typically go and tag it also about that a percentage of time too as well. So we tagged into what, the 2 standard deviation move. The high here was 646.50. We came 3 cents, just above it, right? Whatever. That's 2 sigma move. Pretty rare, right? Pretty rare. It doesn't happen all too frequently. And it typically, if it does happen, it's because the market's rebalancing, readjusting, right? Dynamic hedging kicks in and it presses us, and it presses us higher. And it typically does that with a very clear market net flow. And we came right into it. We're kind of backing off that 2 standard deviation level right now, okay? Oh, Jimmy, I haven't switched to TradeStation. How is it? But if it's cool, I'll definitely take a look for more of a personal trading for futures. If you think TradeStation's a hit, I wouldn't mind checking it out. I meant just like my station that I trade at. I have it on my laptop over here. Technically, you're new, Myra. Yeah, that's totally fine. Take your time with it, right? We do have some breakage coming here on ticks, getting a little bit more frothier to the downside. Not too far away from a new low on a tick reading. Harker. Well, yeah, but see, it would have been stopped out anyway. Perhaps, maybe. But I would have probably just entered back in if I took it, right? So that happens all the time where you get these fake outs kind of moves. And if it turns back around and it's still within a structure, I'll re-enter it. I have no problem getting out and getting right back in. But I did not take the Neo trade at all. So sometimes it's like new like that. What's up, Motion Man? Welcome in. New here? First time chatter? Awesome. All right. The sell side has hit the tape. Let's go down a little bit further here. That would be nice to see. Maybe some shock factor kind of stuff, but I don't know. I feel like it just wants to bounce here in the very near future, and I'm gonna miss it as it just like as it just popped there. We'll see. DD, for the first time, I have seen the daily EM levels above. Yeah. So the reason you're probably seeing it like that, DD, which you're right. That does happen on occasion, but the daily implied move is the daily EM is really looking into the options chain right there, whereas the IVOL range from the Asher bot is pulling it from a implied volatility based off of 30 days, and it's also removing earnings factor. So there's a lot of like data that kind of goes into the design of that IVOL 30 to create those. So sometimes when you get an event risk, for example, like I wouldn't use the Asher bot going into an earnings event. It wouldn't make sense. I would be looking into an earnings or an event. You want to look more at the daily implied volatility if there's an expiration there. And the reason I say that is because it's going to respond at a more dramatic pace. Like you're going to see that change more dramatically. And in this case, you did see that. You saw the daily EM higher than the Asher bot range. It's still really close, right? It's still very close, but that does happen on occasion and still provides some sort of a zone there. IWM is a 5 sigma move. IWM is going crazy. Is that what you said? I don't know. Is that 5 sigma? I don't know. What did I have for daily expected move on? So the daily expected move on IWM was 3.82, and we're up $8. So 369. So almost a 3 standard deviation move. Not 100% positive where the 5 sigma is coming through. Yeah, so I have IWM at a $3.82 expected move. This is where we opened or closed the last time, and we're basically at 9. So yeah, 2 standard deviation move on IWM would put us at 233.61, and that's right here. So we are above a 2 standard deviation move on IWM. This would be the 2 standard deviation move on IWM for me, for what I got from the options chain yesterday. That makes sense. Much better margin rates are cheaper than fees free. Number of trades per month, like market data fees becomes free. What'd you say? Oh, that's pretty cool, Jimmy. Yeah, I'm gonna have to check it out. I think Palantir, next leg up on Palantir. Well, let's take a look at Palantir. Palantir got pretty wild. Yeah, maybe. I know that this shocked people out, right? That's what happens in these moves. But if you're looking at this from like a, I don't know, maybe a channel perspective, let's go like this. Not the greatest channel looking look, but definitely, you know, I'd be watching this lower trend line. So if you're long Palantir, I'd probably have a stop at this low. Then yeah, I mean, if you could come back up into the middle of the channel and break up, very possible.
We'll see
for sure.
When asked whether
That'd be a good risk to reward too.
New economic and
you just got to deal with a little bit of overhead supply here. And there comes that bounce. I didn't take the trade. I had a feeling that was going to happen. We're going to come right back into the Jerome Powell VWAP. I didn't really. That was a little bit of a hesitation on my part. The tick reading did come down to near its lowest of the day, or it did hit the lowest of the day, right? And we saw kind of an exaggerated move when market net flow is overall bullish. It makes sense to come back into this. Now what it does, I don't know. But when I see this type of stuff, those are type of the executions that I would like to see for just shorter term pops. But I'm not gonna sweat it. I did take a few trades today. Already, I'm up on the day, so there's no sweat there. I'm pretty happy with where I'm at. Never bet against the market. Yeah. The only time I bet against the market,
just a bit further from,
which I think what you mean.
Deal with US that plus strategic sectors before the US MCA review officially starts.
Still got some time. Which I think what you mean is just follow the trend, right? Strong stocks typically get stronger. Weak stocks typically get weaker. The only time that I bet against the market is if I'm fading it after already a pretty exaggerated move, right? There's 2 types of trades, right? There you have your breakout trading, continuation, right? Or reversion to the mean. Like that's really what it comes down to is 2 different types. I don't know what else you can really say about, you know, the very like different. Because typically when things go in one direction, either weaker or stronger, and it's a strong move, right, you're going to move through a period of contraction at some point where things are going to kind of calm down. But then when things have already calmed down, you're going to move through a period of expansion. So there's really just 2 approaches. Unfortunately, a lot of people that are newer, they try to go for the thing that's already moved and not do a reversion trade for the most part. They try to go long and try to see if it goes more, but then it comes off and then they get freaked out while the other people were waiting for that consolidation. And or you try to fight the market, right? If it's going straight up, you try to like short it, which sure, or maybe it contracted and then it broke out and you don't realize that, and then you short it and then you go into a period where it just like rips, right? Here we go. So it came back into that. Now we're seeing it kind of pull off again. So I wouldn't be interested in going long here because it looks like it's going to take this low out, but I'll keep an eye. See here, another new low tick reading. So at this point now, I would like to see this low broken and this to hit over minus 1,000. That's what I would like to see. Because then I wouldn't mind executing at that low reading where kind of everyone's on one side of the boat and the boat's about to tip over. And then I'll just take the fade of that. That's what I would like to see now. Am I going to see it? I have no idea. Yeah, it's Friday. No need to overtrade. You're absolutely right. Thoughts on fair value gaps? I don't really understand fair value gaps, so I'm not really the best to comment on them. I might, in some of my analysis, it might look like I'm doing fair value gaps and like doing that and showing you, but I really don't. I don't have a full grasp on that. I've never used them. To my knowledge, I've never used them or called them a fair value gap ever. I just look at, I guess it depends on day trading, swing trading, and so forth, right? I just look at what is price doing. Is it contracting? Is volume contracting? And then I look at quantitative things like the options market, right? And we look at expected moves where it uses a little bit of mathematics. Not difficult mathematics, right? It's not like I'm not a mathematician, far from it. But there's people that can help with that. There's calculators that can help with that, right? It's a lot easier to do intense mathematics to derive, levels of interest in the market automatically now. Thoughts on FTK? I have a muscular looking neck. Perhaps I was realizing that messed my neck up too. Is my neck looks? I mean, I think it could be the shade or the shadows. I don't think my neck is that big. It's pretty tiny actually. Maybe I don't know. I don't think that my neck is like a muscular neck. Let's see here. Tuck the chin in. Better posture, better for P&L. Yeah, I actually do need I do need to work on my posture. I need to get checked on that frequently because I kind of keep my head. I look down a lot, basically because my little child runs around everywhere and I have to like constantly look down. But I do have to work on my posture. Today I'm a little sore, right? So I have muscles kind of pulling in a certain direction because I worked out pretty hard today. It was quite the intense class. Not what I'm used to at 6 a.m. in the morning. Why is everything radium green? Jerome Powell, man. I guess we can pull up FTK. Let me see. I don't know what FTK is. Flowtech. Not really familiar. It's a little sloppy here. It looks like it's kind of like a tradable name when it's in action, but it's a little like up here, then down here, then up here, then down, like a little bit too wild for me personally. But if I were to trade it, like I look for a little bit more tightness, right? Pretty high beta name here too. So not my specific type of name that I'd be executing into. And if I did, it'd be a pretty darn small position given the context of where I'm looking at like volume here. Very low volume. Especially given that it's like a $12 name, but we're talking like 300,000 shares, 400,000 shares, but it's like $11 stock. So a little bit too illiquid for me. Thoughts on gold and gold miners? Yeah, miners look really good. I took some of my position. Oh, I put on dust because that was my position. I did get out of my miner position. I'll kind of walk you through that. I'll show it through GDX, but GDX this day right here. So this day I got out a little bit, and then I told on the market brief I was short still on this day right over here. And then on this day, I did exit, not fully, but I took out another bulk of the position on that day. And then when it gapped up this day, I got out when it broke the high. And then we saw some follow through. So I did a little short position. And the reason I shorted it was only because I was watching silver. And silver has a very tight correlation to miners. And that was kind of coming in. It wasn't making new highs. So I was like, I think that miners are going to have a little bit of a setback. That's why I took it. And now the last 3 days, silver has been popping up higher. And what is the miners doing? The miners are moving higher these last 3 days here as well. Another good time to look at potentially shorting miners, which I have a pretty high hit rate. I would say probably 80 to 90% of a hit rate with shorting miners.
He says
but
himself and Trump see an opportunity to build on where the relationship already is, and says foundation is very strong.
Oh yeah, Trump is talking today, huh? Some sort of thing at 1 o'clock, I think it was. I got to look at that up. But I look at like a couple of key elements, and that's like the bullish percent index on a weekly basis for the miners, and then I also look at what silver is doing in relation to miners. Because if silver's like falling off and miners are still going higher, that to me is like a big red flag because the correlation is just, it's typically like a 1-for-1. They literally move hand in hand. These last few like weeks, the correlation kind of dropped significantly, which is very rare. But yeah, okay. Long Jim. Is that even a stock? No. Why would that be a stock name? Like, that's a great ticker. I know Planet Fitness is. And isn't like Lifetime or LIF, or is that? No. What is it? LFT? No, I can't remember it. Where to drop the anchor, start of the year, 52-week high low. Bishop, I like to do a couple of things when it comes to anchor VWAPs. So it depends, like swing trading or day trading, right? It kind of changes. Day trading, right? For day trading, I like to do, the daily, the cash market session, right? So cash market session right on open. And then I like to do it at the low of the day. I like to do it at the high of the day and the prior daily VWAP as well. And then also I like to have the week to date. It gives me a barometer of like direction. Like, is the week to date declining? Are we below yesterday's daily VWAP? Was it a big day? And then on any news event, I like to put a VWAP too. So like, see this VWAP right here? This is from when Jerome Powell took the stage, right? Why would I put it there? Because there was so much volume. Boom, right? We saw a big move, right? So that's why also I came to the conclusion that if we see a big move down, probably see it try to come back up and retrace. And then as far as like swing trading goes, yeah, I like to do, so for swing trading, I like to do week to date. I like to do monthly. So start of the month, right? The quarter, I'll take a look at that in some cases, the year to date. And then sometimes if they're big months, I like to do the high and the lows of maybe the high of the month, the low of the month, the high of the week, the low of the week, the quarter to date, maybe high, maybe low. It just kind of depends on what the chart looks like at that time. And then if there was a big move on any sort of news event or earnings event, right, maybe apply the VWAP there too. It just depends on that time frame that you're looking at, maybe to give an overall broader view of that. When it comes to like 52-week high, 52-week low, I don't like map that out. But if it is like if it is a specific low or high, like a very clear one, I'll probably do it, right? So if I do the SPY, a very clear marking point on the SPY. What's going on? No, what's going on here? A very clear low would be something like down here, right? But then maybe it comes up and then it hands it off over to here, right? That's from Brian Shannon. Also, by the way, if you want to learn more about the Anchor VWAP, I would highly recommend just Brian Shannon's book. Brian Shannon has a really...
a bit further from Carney says they are not raising tariffs on US steel and aluminium today.
He has an amazing way to take complex subjects and just really simplify them. But yeah, so also like maybe right here, right? I put a VWAP to this one right over here because we pulled down and then we gapped through it. And this is kind of like that interesting level there is kind of that breakout area, and then see what price does through there if it comes back and tests it and so forth. So. The news squawk that I use is Justin Thinkorswim. If you go to the chat rooms, global news, and you hit listen, it's free. What do I think the next move is for IWM after the 4% pop? Let me take a look at IWM. My guess would be that we can see a little bit of follow through, but it's probably going to start to consolidate. Right? We're outside of the monthly implied move, so coming back to the monthly implied move at some point. Right? I guess it's kind of the end of the month. But small caps, right? Look at this. We're breaking out to new highs of the year. That's a positive sign for small caps. So I don't like, so for example, when we saw this, I was long IWM, right? But when we came up to these implied move levels, like what do I do? I reduce the position. Today, I reduced my position. Actually, let me pull it up. I'm gonna see how big my position is. I reduced it pretty dramatically. Did I get out of the position? I guess I I thought I still had some left. Give me a second. I know I sold some today, but I didn't think I sold it all. Give me a second here. Oh my gosh, I hate when this happens. All right. I must have, I don't know what happened here, but I did definitely sold some today, but I ended up selling it all. So I don't have a position now in IWM. Dude. I gotta like go through my positions very slowly to see if I'm just like, if I'm missing something here. All right, when did I exit? I'm gonna go to the smaller time frame. I want to see when I exited this thing. I definitely didn't think that I sold it all. All right, IWM filled here today. What time? What time is it? So that's 10 my time. What time is this? Is this Pacific Standard Time? 7? Oh, shoot. 10:52:43 Eastern Standard Time. So 10:52 is right here. So 10:52 Eastern Standard Time. So I have PST up. So apparently I exited my full position right there. I'm not going to re-enter now.
A bit further from Connor, he does note Trump.
Given now that I have new data to work off of.
Kickstart negotiations.
All right, sorry, I'm kind of holding up the stream because every time I go live, man, trade live. Like, first off, I don't know why people do it unless if they're using like, like I'll trade live. Sometimes I'll execute into swing positions, but I need to be focused. And when I'm trying to like talk and do all of this stuff at once, it takes away from my most valuable resource, which is my focus. And I already have ADD brain, so it makes it even 10 times worse. All right, so, okay, back to IWM. Yeah, very strong move today. Apparently I exited at 10:52 or 7:52 Pacific Standard Time, 10:52, which was right here. And from that point, we kind of went sideways. I thought I still had a little bit of a position. So for me, I mean, I'm still interested in being long IWM, but I'm not going to re-enter at this level now. Now, if it gets away from me, it is what it is. I'll wait for the next consolidation. It is what it is.
And just a post on X here from Pulse. He does note he's referring to
you say short it? No, I'm not going to short.
Fraud. Pulse says he's referring to more people this afternoon for mortgage fraud. Of course, it's not clear who those 2 more are.
I don't want to catch any sort of short or anything. Like I'd rather just be in a heavier cash and just wait it out. If it pulls down, great, and then it gives me an opportunity to kind of re-enter. But sometimes it's very hard for me to like the transition. Okay, so this is different for everybody, but from my experience, so years ago, I told people this, like anybody that's been in the Discord for multiple years, there's a few of them that have been there since like day one. You know who you are. There's been times where I was executing into options. I was sharing more short positions. I was sharing the long positions. And then there came a time years ago that I was like, yeah, I'm not going to trade options anymore. Sorry if that bugs you. and then I'm not going to short. I'm not going to do nearly as many short or even share any at that, as a matter of fact, because when I went through my history, I'm like, how can I get better? Right? I feel like I have the knowledge, but how can I elevate my performance and also reduce the amount of risk and also kind of not even risk, but like level of comfortability, like being able to break away from the computer, not worry about the markets, not think about them. And that was simply by removing options and removing trading anything from the short side. And now for options, I still think options are an incredible risk management tool. And just recently I started executing a little bit into them. But if you are an options trader and you're using like spreads and you really know what you're doing within that space, but you're not just like buying a call or buying a put, because you have to deal with it. Like trading markets are already hard enough. Then you have to add the time element to it. Very difficult stuff, right? You're adding another layer of difficulty for yourself. spreads and various more strategic strategies with options help mitigate that. And so if you don't know how to trade spreads, very useful tool, very awesome. But that's what options are for, by the way. They were built for risk management tools, right? They're risk management tools, but they're not quite used like that in the retail markets. Okay, besides the point, options great, whatever. Shorting the market, I have a very hard transition piece, right? So if I'm bullish a stock or like the market's bullish and I just want to trade with it, and maybe then if it goes way in my direction, hey, maybe I'll flip short now, right? The transition to turn back long takes me more time because I'm like, now I'm short, now I'm going long. And I didn't like that transition. I didn't like the feeling of trying to catch the high, catch the low. So what I do now is I focus way less on shorts, significantly less on short positioning. And if the market's falling, I'm looking actively for longs, for names that are getting beaten up. So I'm using the brain and my resources rather than like trying to short the market and like getting tied up. I'm actively looking for the opportunities in the market. And if you watch my YouTube, you get that. But you really have to think about it because think it through. What do you see in my YouTube channels? I'm looking at potential paths and I'm showing you what's happening in real time, right? The data. And then creating like, hey, it looks like it's frothy here, but I'm doing it like where you get like a week's notice, right? Or multiple days of notice, right? Where it could like, hey, these levels, watch out for these specific levels. It breaks up here, maybe you can go up a little bit higher, but this is where you want to watch out. Whereas, a lot of people that might not watch that, they don't know about some of these levels. It goes up to it, and then they're like, okay, I got to go long. And then the market starts to come in and consolidate. Then they get out of the position because it comes down. Meanwhile, or they flip short or whatever. Meanwhile, I'm trying to use my efforts and energy to find out the names that have been quiet, that are contracting, and it helps free up just a lot of resources in my brain by reducing the amount of stuff that I do. So hopefully that helps. I went on a little bit of a tangent there, but sometimes that's all you need to do. When you look at your performance, a lot of people say, hey, what can I do now? Like, what can I do? What can I do? What can I do? Is there a new strategy? Is there a new way to scan? Is there a new this? Is there a new that? But what they very rarely do, which I would say, please do this, clip it, send it to me right here, is to find out what you can remove, right? Less indicators. What's not working for you? What do you actually like? Do you really need the MACD? Maybe it works better for you on a weekly time frame, and the weekly time frame is something that you look at on occasion, and you just want to see the larger trend. Okay, cool. But do you need it on the 5-minute time frame? Do you? Maybe if it's part of your strategy. Do you need this and do you need that? Like, what can you reduce? Do you need to be shorting the market? Like, is it adding that much value to you, or is it adding more stress? Maybe that's all you need to do. Maybe you don't want to do longs and you just look for shorting. So it depends on the trader, right? It depends on your risk tolerance. I can't tell you what to do. You have to do what's right for yourself. But I will say that if you can reduce what's not working, take it away, you'll be significantly happier behind the screen, and your performance will go up, I would imagine, significantly, right? It did for me. So I'm only talking from experience. Okay. What are your thoughts on future 300% tariff on semiconductors that Trump is going to announce? I really don't know. I guess I'll just let that. So I'm being asked right now a question about the thoughts on the future tariffs on semiconductors. Honestly, I'll let the market tell me. Maybe the market hates it. Maybe the market loves it. I'm going to let them decide. Because ultimately to me, I'm here to not try to, sometimes I'll create the narrative like what I think could potentially happen, right? But also when I do that, if I'm wrong, I have to be willing to be like, okay, change, right? So a lot of the narrative talk has dissipated significantly with me because, once again, what I was just talking about here is, was it adding any value to my performance? And it really wasn't, right? Just watching flow of the market really is, watching where price goes. And yeah, sometimes those bigger macro views, bigger macro pictures of like where things could potentially go, those can help generate ideas, trade ideas, and where markets could potentially go to, or various assets, various industries, various sectors. And I think that's important to watch because, right, there's a narrative right now being built up around inflation accelerating here. So the moment I think that, right, and see that, and like there's some good data to support it, I think energy, like oil is a big contributor to inflation. So then I start looking at energy names, and I'm like, I'm not going to trade it based off of that, but I'm like, okay, these names, they've been quiet. Like, what have they been doing? Oh, let's take a look at Oxy. Oxy has been doing absolutely nothing, but does anybody realize that this contraction that's taking place looks like it's about to explode in some sort of a direction, right? So, okay, if inflation accelerates, if oil goes up, energy names that are related to it could do really well, and this is a good risk to reward, so yeah, I'll execute. Sure, I'll take it. If I'm right, I don't care if the narrative is right or wrong, but right now, it looks good. Tomorrow, it could be down here. I have no idea. But I do know that if it's down here, I'm not in the position. Now you know that if it's down there tomorrow, I'm not in the position. If it's up more, you probably know that I'll be moving my stop loss up or taking partial profits. Okay? For me, I want this thing to just explode higher because I have a position in it. But I also am kind of aware that when energy names and oil outperforms the S&P 500, it's not typically a great sign for the S&P 500 when energy is the top performer. I've shared charts on that. Maybe some of you have seen it, but did Trump talk already? I don't know. I didn't hear any chatter on it yet. So I thought that was at like 1 o'clock Eastern Standard Time. Yeah. Dad just needs Bollinger Bands. So I like Bollinger Bands. I like Bollinger Bands. Yeah, the Bollinger Bands are great. I actually use the Bollinger Band width on occasion, and that's not even an indicator on overlay. It's actually looking at just the width because, so check this out. I want to show you. Check this out. This is really cool. So if I go over here and go to what is it? Bollinger Band width. So this is, I don't like the look of it on, I don't like the look of it on here. Let me see if I can adjust the settings of it. Bollinger Band width, yeah, settings. Okay, let me see here. Simple, we'll go white. We'll make it thicker. I don't like this bulge and squeeze thing. I have no idea what that is. Okay, 2 standard deviation, length 20. Yeah, we'll just keep it standard there. Okay, so Bollinger, so if I had the Bollinger Bands on here, it's like cool because you can say, hey, it's at the top end of the range, it's at the lower range, you know, and you see all of that. But the Bollinger Band width, this just shows you, hey, are the bands tight together or are they expanding, right? So if I apply the Bollinger Band so you can actually see what I'm talking about, Bollinger Bands, where are you at? All right, see how it kind of expanded here? Like the thing shot up. Well, look, that's because the bands got really tight. But so what I like to look at, right, things move between contraction and expansion. Look at how tight price action was. How tight were the bands in relation to it? Well, the bands have been the tightest that they've been since December of last year. So over here, and what happens shortly there? A big expansionary move in price. This was to the downside, right? So things contract, they eventually expand, which is why you see it go tight, goes bigger, go tight, go bigger, go tight, go bigger, go tight, go bigger. You can do this with any product, right? SPX. Goes tight, boom, bigger. This was the tightest it's been for a while. In fact, if you go back to my videos or even Twitter, I was posting about it. I was like, we're about to see energy like enter the market. Like there's going to be an explosive move, right? I didn't know which direction it was going to be, right? But I knew that there was going to be a move. Now look at it, right? Got pretty tight, kind of moving up, got really tight, moved up, right? So bands are getting somewhat tight again. October is typically a time frame where you get more tightness in the markets, believe it or not. Okay, so went on a little bit of a tangent there too, but kind of cool little way to. Damn, I got too much on my screen here. Bunch of stuff I don't use. Okay, all right, let's go here. Oxy. Oh, Dan, cool. You played Oxy? Nice. Hopefully it keeps going. Oh, Omar, that's awesome. Been watching for 4 years, man. I always got to remember that. Like people have been probably watching me for quite some time. Some people have, and it's like obviously you've probably seen my approach to markets change over time too. And that's great. You have a big position SQQQ, losing big. Well, man, I hope it, I hope you get something out of it, or, hope it doesn't damage the portfolio. That's not what we want, but the market is kind of hanging on to threads here. We're seeing a series of lower highs. If the market sells off, I would be interested in 64.35. That is seemingly being actually an area of concentration now, 64.35. So if people are trying to buy the dip and it keeps on kind of dipping, 64.35 is about halfway through this big 2-hour rocker of a candle right there. I don't know if it's going to get there, right? Obviously, nobody knows. But market net flow, it's very bullish. 646 on SPY. We're under that by $1. That's kind of overhead resistance. So if we start bouncing, 646 can be kind of a a hit or whatever. Right in here. You've been following me since 2021. Darren, you did not need to do that. The super chat for $20. Are you kidding me? Thank you. That's insane. You just got me some, well, I haven't been drinking any alcohol, but I was going to say beer money. So I might have to have a beer to celebrate. Cheers, man. Thank you. You did not need to do that. Holy cow. That's 2 months of Discord right there. Thank you, Darren. Canceling the noise. Yeah, very, very difficult to do that. And, to be quite honest, if you've been watching me, there's a lot, I do go through a lot of stuff, which probably a lot of it can be noise. But I try to do it when at specific times, right? Like, now he's talking about back month, first front month volatility. Now he's showing up the bullish percent charts. Like, there's a lot of stuff, a lot of signal charts, but I also build the case of why I think that, hey, things could slow down here, or why things can bounce from these levels, right? That's the whole, that's the goal. So there, when you listen to me and you watch my videos, like, a lot of people will be like, dude, this probably doesn't matter. And to an extent, they could probably be right to some extent, right? But I'm only sharing the things, for the most part, right, that have helped me get on the right side of trade or be prepared for a potential move. And it helps me kind of put down the gas a little bit, accelerate when I want to, put more money to work. And it also helps me take my foot off the gas during other times where I'm a little bit more concerned that we might be going through a consolidation that I don't want to go through, or a potential pullback. No. Thanks, Darren. Let's keep making that money. Let's keep making it and protecting it. Grow and protect. That's what we got to do. Thank you. Did not need to do that. How can I follow other investors for the U.S. Investing Champion? Is there an official standing page? Love the work you do. I've been watching and learning from you a long time. Yeah, there's the United States Investing website. So if you just type in like United States Investing Championship, you should find the page. And there's other traders, and they put their @ sign there. I want to be very clear though, if you do that and if you follow like, hey, this guy made 300%, you got to understand that they're risking significant amount more, right? It's not like some special thing, or probably most of us are looking at the same names. Some of them might be more actively day trading or putting more leverage to work. So just be aware of that, right? So for example, me in the United States Investing Championship, the minimum balance that you can start with is $20,000 to like enter. I'm not trading only $20,000, right? I'm doing more. I'm doing a lot more than the minimum balance that you can trade. And some of the other traders might be doing the same thing. I have no idea. They don't disclose that in the rank that I'm at, but I'm doing more. And I'm not intraday trading. I'm not shorting the market at all because I really can't because it's a 401k account, right? So I can use maybe inverse ETFs, but I haven't. Maybe once, but I don't. I think Dust was the inverse that I used in there. So just keep that in your back mind. But yeah, they should. A lot of them should have your their X profile or whatever there, and there's probably some great resources out there. Even from people that might not even be doing ranking that good. You just never know. They can have a wealth of information. They might just be having a bad year. So don't get too caught up on the numbers, but maybe those traders that are actively putting their rankings out there and are doing good on the year, could be some ones to follow, because it's hard to do. You know, report every month and have like a big audience follow it. Like, honestly, for me, I was just thinking the other day, I was like, dude, I might need to take a year of this off, because like, I like the accountability, but I also kind of need a little bit of a break. Like, right? Like, I just want to like trade, bring back some enjoyment, but lately it's just been like work, you know, like, which is good because it is work, but also it's just, it's stressful, I guess, in a way. It's stressful, you know. That's why I always tell people when I go into, I'm like, I'm not competing. I'm just doing it for everyone to know that I'm verified, you know. So there's somebody looking at my performance and verifying it. We have NQ slipping off right now, so I'm going to go ahead and make sure that the tick chart's up. Keep a close eye over here on my tickies and see if it slips under this. We are getting a little bit frothy here. Okay, so we're slipping a little bit. I'm watching this 64.35. That's kind of far away. So I don't think it's going to be some sort of a straight shot, unless if, you know, I guess there's some talk going on, but I do like to continue to watch as we're breaking this low, right? I'm not interested in kind of going long here, but I would be interested in kind of executing on a minus 1,000. Right? And if it holds down there and it keeps going lower, I'd be looking at 64.35, because I can hold an MNQ contract for a while. Not worried about that. But I would prefer to execute a fade into this selling via a kind of an extended move. So we're here at about minus 474 ticks. Still, whatever. Right now, my thought is protecting my capital. So I'm not going to be rushing. Even if I miss a trade, I do not care. Do not care about missing. Right now, I care about just following some basic, simple rules and executing when it makes sense. You got to work. Got to get that pool. Yeah, exactly. There's still divergence between SPY, HYG, and HGX. I'd have to check, David. I looked the other day, and I don't remember seeing that, but I have to look. Maybe a different time frame, but I was looking at the 60-minute. I don't remember seeing it. It's been like, I think that was kind of like a week ago that I looked, though. I can't quite remember. It was scary because this is a grounded barometer, and I'd be really sad to lose your resources for a year. Oh, David, when I say that I'm going to give it a break, I didn't mean like YouTube and going live and stuff. I meant just the added stress of like sending my broker statement in, getting verified, you know, going back to it. Like it feels like it's like it's starting to feel like a heavy burden, but also I know that how important it is, because a lot of YouTubers and traders don't do it. So when people talk about like, oh, you don't actually do this or that, then I can point them that way. And the ones that are always saying that are the ones that are like, you're only up 30%. It's like, okay, so you clearly don't know what you're talking about. Or you're working with, you know, $100 and you're like, you're only up 30%. It's like, okay, calm down, buddy. 30% is insane, especially when you're trading with a full portfolio. You know what I'm saying? But yeah, I don't plan on taking a full year off by any means. No, I'll be honest. Like I like putting together my YouTube videos, but it also has been feeling exhaustive. So when I first started, right, and for years, I really enjoyed doing it and really having fun with it. And I want to bring that kind of joyful kind of curiosity back. Maybe introduce like some different style videos here and there. Maybe more evergreen content. Maybe more live streams. Something that I'm kind of excited to kind of do. Because doing the research and the work, it's not easy. And to deal with like a bunch of like the comments that come from it is just like, man, like I put in so much work. I build out like a 30 to 40 page deck, and then I just get like crapped on most of the time. Not all the time, obviously. But it doesn't take much to like feel the weight of that, right? So I know it helps a lot of people and people like it, but I also would need the community to share it, to hit thumbs up, to subscribe, to talk to people, so it grows to the right people, because over time, it's like, dude, it's like a ton of work, and I get nothing from YouTube. Nothing.
Nat gas unchanged at 122.
Comparatively to what I do trading and so forth. You know what I'm saying? Alex with a 9.99 super chat. Are you kidding me? You guys, please, you don't need to do this. You've been following me since 2020. Appreciate you and Coco. What do you, money market accounts still at a time of high Fed, where would you go? Oh, hey, that's actually a good question. Where would that liquidity go? Because there is a lot of money in money markets, right? Could very well go to the markets. Alex, you did not need to send me that. I appreciate that. You guys, geez, these super chats, that's crazy. Thank you. Where do I think that liquidity goes? It could very well go into markets, but a lot of the times when I think about it, I'm thinking like if they have the extra money, they're probably enjoying the higher rates and it's kind of like risk free. I guess the risk is missing out on bigger market moves, right? But a lot of the time, the people that have that money in that account probably have money in the markets as well, to an extent, right? And they don't want to execute into it, or the reason they put it in there is because they don't want to have the risk exposed. And if the market keeps going higher and higher, it bothers them. But is it enough to say now all of a sudden I'm okay with, I'm just using an example, but I wanted to get out at 100 and put it into money market to save it, but now am I okay with going in at 150? Like, is that going to change their mind? And I think obviously yes to some, no to others. But for the most part, I mean, you can look at like, I say Warren Buffett, right? The largest cash position in history, right? That's his largest cash position in history from Berkshire or whatever it is, from some charts that I saw. Obviously, I don't know exactly, but that's telling of something. What does he know? I mean, he's getting a crud ton of money coming back from just having it in savings, and I have some money in money markets. Like, I don't care, right? It's just like a protective balance over there. It's sometimes emergency funds. I'm fine with that, and it reduces these cash positions in money markets. Reduce the amount of volatility that's in the markets. And a lot of the times now, which I feel like we're moving into more of a stock picker market, right? Where people are really benefiting from understanding some basic principles of chart reading, maybe some macro, whatever, and they're really benefiting from the beta of some of these stocks. Because if you have let's say $100,000 and you make 3% a year on it, I don't know what the rate is right now. It's like 3 point something. Sometimes maybe 4. I can't recall. I'd have to look. But you make $3,000 a year, but now you can have a stock that's trading at $40 and you can put $10,000 into it and you can make that $3,000 because the beta is so high in like less than a month, less than a week, right? In most cases. So you can like risk only, have $10,000 exposed and make the same amount of capital that your bigger balance, your nest egg is doing. It's pretty cool, but you just got to like really kind of beta adjust. But overall, for kind of the answer to the question is I don't have a clear set stone of what would happen with all that liquidity. But if it all comes in, if a lot of that comes rushing in, I would imagine that we can see small caps finally do better, right? That would be telling. We still have obviously some event, like there's risk on the horizon, right? I talk about risk all the time. That's what we do in the markets. Like the steepening of the curve, right? The 10-3, steepening of that, right? When the Fed actually cuts rates, like we've noticed that it's not that great, right? Through historic looks of these charts. Historically, it hasn't been, right? It just doesn't take much to look. Look at 2008, look at the financial crisis, look at the dot-com bubble, look at pandemic, right? But when they slam to zero, all of a sudden things go crazy. So having some,
which are due at 5 o'clock London time, midday Eastern time, where he says he's got a very big announcement. So just on the lookout now.
Okay, Trump announcement's coming. So my thought process here is simple. I think that based off of the question that you asked, I have a pretty interesting thought process here, and I don't think it's mainstream. I really don't. But I think that if I mention it here, depending who's watching this stream right now,
FIFA President Infantino for the big announcement.
The big announcement. Oh gosh. Oh brother. Oh man. Are we going to be trading the big announcement? Sheesh.
Just making you aware, this large announcement from Trump is to do with the football FIFA World Cup, as Infantino is currently in the White House. So just making you aware, this big announcement is regarding the FIFA Football World Cup.
Okay, FIFA World Cup. Okay, cool. So hopefully it doesn't have that kind of effect on a market. Okay, so here's my thought process about like where like all that money in money markets are working to go. From what I've seen, from what I noticed, markets now have been responding a lot quicker to to selling off, right? We've been seeing what's called V bottoms, right? Where the markets sell off in a fury. And all of a sudden, man, boom, you get buyers that step in. So my thought here is if we have a full out, blown out panic crash, like, right? It was kind of scary this year. Was it even, I can't even remember if it was this year. That's how fast time moves, man. Look at like, okay, cool, scary, whatever. Recovered super quick, right? Boom, flew up higher. So the market, and look at COVID, right? Fed acts faster, markets respond quicker. So my thought is here, if we do have a full blown out panic attack, something insane, big move, big crash, I think that the bottom is going to be very apparent and it's going to come in quicker than usual, right? Like we can hit these levels and the scare flush people out. But then all of a sudden, I think that there's still a good amount of people that are looking for that. We'll see if they execute into it, right? Or what the Fed does, how they respond if something were to happen. But I feel like that kind of an event is going to bring that liquidity back into markets. And then we can see a potential just insane type of volatility recovery. So maybe that's what they're waiting. Maybe that's what all that money's waiting for, is the right opportunities. I mean, and a hint of that I can share with you is like UNH, right? Look how massive of a decline that was and how fast it was. And who came in? The people with the big cash positions. Warren Buffett, right? Michael Burry. I don't know how big his cash position is, but they came in. So they're already showing us, they're telling us right now, they're looking for the names, like they took advantage of the opportunity right in front of, right in front of us. So perhaps maybe something like that can happen. You know, we haven't, for the last 5-6 years, I don't think we've went through a protracted area since the financial crisis, honestly, a protracted, elongated area of intense volatility. Right, 2022, I guess, was that was a bear market, and we saw some pretty big moves, but it wasn't like years. These markets, man, they change. People hold on to like how things were once, but then it's like, yeah, but the markets are completely different, right? Like 0 DTEs, like 1 DTEs. I mean, all this is fairly new. Right? And then when you really look behind the scenes and you look at like vol control funds, CTAs, all these different like, gamma models and all this stuff, like you still don't actually know the intricacies behind them. You can only use them maybe to get some sort of an edge, but you don't quite know, right? Of what these models are actually doing. It's a very interesting time. So the reason I bring all that up is because there's only 4 things we can control: what we buy, when we buy it, how much of it we buy, and when we sell, which are all based around risk management. So when we start to focus too much on the things that we have no control of, we lose focus on the things that we do have control of, which will dampen our performance overall. So if you focus more on the things that you can control, you're going to do better. All right, I went on a tangent there. My bad. I got to get my posture back too. Okay. Evergreen sounds cool. Thanks, Tammy. Yeah, maybe I'll try to. If you guys have some ideas for some type of evergreen content, let me know. I mean, that you guys would prefer as far. And by evergreen, if you don't know what I mean, it means a video that would make sense to watch a year from now, right? Things that stick around, not like the daily stock market brief where you watch it and you maybe learn something that might come back to it because like, oh, I talked about it this day. But evergreen, but typically then it'll be another market brief, right? That will give updated information. So it's not evergreen. Evergreen for me would be things that you can come back to or things that remain important for time. So if you have any ideas about that type of content, go ahead and drop them in the chat, and I'll make a little notepad. And if anything kind of sticks out to me, something that I'm not going to just do it just to do it, but if there's something that I'm like, okay, actually this would be beneficial to tell, I'll do my best to share it. Okay. Thanks, comrade, about the Discord and stuff. And I dream for 30%. Stinky man. Me too. I focus like, dude, Stinky man, like 30% is crazy performance. Like that's crazy good. Like really think about it. If you did that for 10 years, that's insane. It's great. You'd be one of the best traders in the world doing it for that consistently, 30%, right? Maybe not like, it depends on like some intricacies with how you got that 30%, right? But People that have bigger portfolios, right? If you're focusing on the small numbers, like, hey, 2% a month, which is still crazy, right? But it's also not as difficult when you really break it down, but that's 24% a year. But people are over here telling me like, I focus on 1% a day. I'm like, okay, that's sustainable. Look at the market going right now. Just floating right now around the VWAP. That white line is the VWAP from the Jerome Powell meeting. Why didn't I execute into this? Did we just not get a pretty strong tick reading? I guess we didn't really get that strong of a tick reading to the downside. More hesitation. He's holding 5% of U.S. Treasuries. Travis talking now. Do I have a team that helps me research and YouTube content? No, but I need a team. To be quite honest, it's all me. I don't even know how that works to like help build a team with David. Maybe
Bloomberg. It does explore using Google
I don't know the
Gemini
start
AI
of like
to
doing
power
that.
revamp Siri. That's Apple explores using Google Gemini AI to power revamp Siri.
I would like
Siri.
to have to work
Bloomberg.
work with other people. To be honest, yeah, I would prefer that. Always yapping about something. Maybe send me an email or something like that, and then I can look at it. I don't know if I'm looking for it right now, but to build like the connections and like that's one thing that I miss most about the corporate world is I had a team to work with, right? You bounce ideas. It's just better, like because for me, I'm here behind a screen. The only voices I hear is the ones in my head. That's it. So live streams are nice because it's kind of an outlet, but the only thing is sometimes I can't do lives because now I have to basically be a full-time dad as well. Most days. We haven't really got like a nanny or a babysitter or anything like that, but our parents help on occasion. But it's a few hours here, a few hours there, which makes it hard to do. Hard to do anything. Anybody that with a kid knows that's harder than heck to do this. And now we have another kid coming. So now I probably do need a nanny or somebody to come help out. Ronaldo, I need a job. Here we go. Oh, we got some. Okay. Okay, cool. Yeah. I'm going to put that in the notes there, comrade. Any other evergreen ideas? What the heck? Dude, I copied that and I pasted it and an image showed up in my notepad. What? That was weird. Like an image of somebody. Okay, so I put that in there. Anybody else with any ideas about potential evergreen type content ideas? Let me know. It's 2022, the stock market beef show. Best on our 2022, man. That's a while. Buffett bought 411. UNH, yeah. So what drove it up is the news, I guess, of him buying it, right? But that's the thing. He was buying it at that what was perceived as value, which it might still be. Who knows in years? That was Apple News. Okay, that made that big move. Day in the life of a trader. Oh, day in the life of a trader. Yeah, that's actually kind of interesting. I like that. Best way to get in touch with me? I'll just send an email. figuringoutmoney@gmail.com. Yeah, just, oh. Am I still live? Am I still live? Oh my goodness. Okay, thank you. Thanks, Juan. Sorry. My computer just went black on me. Hey, what's up, Exotic? Yeah, that's a good point about that. A 20% drop. Yeah. Who knows? All right, NQ making its way back above the VWAP over here. And we're still floating around the kind of red zone. You know, I kind of went live here. It was one of the first things we talked about, how, you know, on the upside, 5,500 or 6,500, but this would be the area where we probably see some sort of consolidation. This was also kind of by the 2 standard deviation move, but overall still just bullish, right? Just bullish. Strong, like bull. SSF, pool's coming. Pool's coming together. We have gunite and we just did concrete work all around the backyard. Day in the life trade blog. Oh, that'd be kind of fun, actually. That I would definitely need some sort of editor. I don't know how to I have to see somebody maybe else that does it. Is there anybody that, like, any trader that does it that you like their style? Maybe I can just find a way. Maybe just I can record more and then maybe just do voiceover a lot of it or something like that. Funding tick. No payout on funding tick. Right now I am using, I don't want to mention because I don't have a payout yet. So I'm not going to mention it. I don't mention the prop firms unless if I see the payout come, because I don't want to like I want to be proven that that I can get the payout, but 2, I want to see the money hit my bank account before I mention them. And the one that's actually the money that came in through them was Tradeify, and it came in quick, came in fast. I had one problem one time, and it was like not even a big problem, and they resolved it in like a couple of days, and it was through a holiday weekend. So it was very fast. So that is the only one that I am mentioning now. Every occasion I'll say, like I've been saying that I tested some, but right now at this point, I'm only going to mention the names that I get the hard proof of money coming in, which I'm somewhat close to getting paid out again on one of them, and I'll see how that experience goes. 50K, $50 and no activation. That's $50, $50 no activation fee. Is it like you have to pass a test or something? Right? Is that, are you savage? Do you have to pass a test on theirs? Or is it straight too? Today would be a good day to use the pool. Yeah, you're right. It would be. It would be great. I would go to my neighbor's house and use their pool. Any stock which will boom like Palantir in the next few years, which you can suggest? I don't make any suggestions like that because I don't really know what's going to happen, but I don't know. Let me think here. I like this one. Unfortunately, is like in the like this one I was looking at for this year of a good play, and it went up. I did sell some yesterday, but it's up 36% on the year. And this DIY, this is now in the OTC market. It's based out of China, but and because of like accounting fraud or some stuff. But Luck and Coffee did the same thing, and I feel like this has the potential to get like uplisted again. This is a huge company. This is like an Uber of that. Another one would be Grab. This one hasn't been like okay, ignore that one that I just said because unfortunately, like it is the OTC market and whatever. But Grab, GRAB could maybe be one. Like this is like a low price name. I don't think it's gonna go Palantir crazy, right? Maybe, who knows? But this is the weekly chart. Higher lows, inclining 40 week, 30 week, 10 week price action, putting in the higher lows into this pivot. This is it's kind of like I guess I'll just read it off, but this is like I'm just gonna read it. Super apps in Cambodia, Indonesia, Malaysia, Philippines, Singapore, Thailand, Vietnam, operates 4 segments: deliveries, mobility, financial services, and others. It's like an ecosystem sort of thing, I guess, and apparently pretty good. That's headquartered in Singapore. Daily time frame, I mean, it's pretty clean look. Higher lows. It's getting kind of tight right here. Actually just kind of makes me want to just take a position just to have one on there now that I mention it. Just because it is coiling up here. I don't know if it's going to break out. Like today it's up 2.3%. Okay, whatever. this was also a name that a pretty prestigious analyst went over to as one of his like bigger high risk ideas, along with Uber. And Uber's been doing really well, and they were talking about it more basically down here. So maybe that wouldn't be a good player. But like I said, for something like Palantir, yeah, you would need to stick to more growthy type names. And if you can find the sector or industry that might be on the come up, right? AI has been on the come up. Nuclear has been pretty popular. But any new technologies, things that can change or kind of disrupt markets, right? Disruptors are names that don't have the attention typically now, but then all of a sudden change. Like think Netflix and Blockbuster, right? When Netflix dropped, that was basically the peak of Blockbuster. If you pull up their charts, Blockbuster's all-time high top, it was straight up like great, everyone loved it. As soon as Netflix came out, all of a sudden the market started pricing in, boom, and they started flipping. I'd have to pull up a chart like that and build a chart because from what I remember, that was like, I'm pretty sure I've seen a case like that or seen a chart. And from what I remember, it was darn near spot on that as soon as Netflix dropped, the disruptor of the industry, boom. And like, can these names like Amazon be disrupted? Absolutely. But it's going to take a disruptor, and nobody's going to believe it to be a disruptor when it comes out. Why would people stream on television when you could just go to the store? Why are people going to send a text message when you can just make a phone call? Why would I need to look this up on the, whatever the case is, right? It's always something that people just do not believe to the fullest extent. And that's where you got to have that really open, optimistic mind. And instead of being a critic, you need to be somebody that just learns about it, right? So why would people want to do this? Okay. Like instead of like, why would anybody want to do, why would, like, this is something that I learned about Bitcoin back in the day, like that really threw me. I was very early adopter, very early to Bitcoin. And I let friends and other people tell me and convince me because I wasn't confident in my own self to understand, like, because this was during a time, this was, when was this? Like 2011 or 12. I can't, maybe around there, 2011, 2012. And I was like, dude, I am going to build a bunch of crypto miners. And I found one of these like server farm things that would allow me to pay them. And I was like looking at the cost to bring in all this equipment to mine crypto. And I'm like, and then I go to like, I'm not that techie, right? I was techie, but I wasn't to the extent. So where do I go? My most techiest friends. And because I wasn't confident in myself, I let, which they could have been right? Obviously in hindsight, it's all different. But at the time, they knew more. They knew more about the tech, about all this stuff, right?
Of note for Intel INTC, according to Bloomberg, Trump is poised to unveil Intel deal for equity stake on Friday. Trump reportedly poised to unveil Intel deal for equity stake on Friday.
Coming back up to the two standard deviation move. So basically, in short, what does that mean? Like, I still have the text thread of this. Like, it wasn't a text thread. It was actually Facebook Messenger. I got to find it now. And they basically just said, why would you waste your time, dude? Don't waste your time and money buying that equipment. Like, don't do it. It's a scam. It's all this. It's all that. And I'm like, like, I already kind of believe that to an extent. Like, I didn't think it. No one thought. Everyone has their Bitcoin story, right? Everyone has their stories. But the what I got from it is a very important piece of this. And the piece that I got was, if I'm not willing to risk my own money to just test it, like I could have just got one miner and just locked a little bit away, right? Little bit. When you make the investment, you learn more and you learn at a faster rate. You don't need to risk everything in order to get it, but don't just not do it, right? Even if it's a little. Like, the biggest risk is not taking risk in many cases, right? Or the biggest risk is taking on too much risk too as well. But when it comes to like, regrets, are you going to regret not trying? Is that regret going to hold more weight than anything else? And I think in my case for that specifically, so we can talk about all kinds of things, but you got to at least have an open mind. And if somebody's very closed off, probably watch out a little bit. right? Because that closed off nature, especially if you really trust these people, which are fine and they're well-intentioned, right? There's all well-intentioned. Like they actually believe what they're saying. It's not like they're lying and they're doing what they believe is right for you, but really they're projecting what they think is right for themselves, right? It could put you in a position that if you don't have the confidence in yourself to listen and actually follow, and then you may well be really off and they're right. Or you run into a situation where you're like, dang, right? I don't know why I started talking about that. We went off, I guess, on a tangent there. I could be living in Granite Bay, but I jumped on coins. Granite Bay. What just happened there? Why did I'm sorry, dude. I don't know. I just accidentally copied your message to me on my screen. How do I release? Okay, there it goes. I don't know what I just did there. I accidentally transferred it onto my screen. That's new. I actually like where I live more than Granite Bay. By the way, I'm a stone's throw away from Granite Bay. I'm in Granite Bay I'm in Granite Bay very frequently. Stone's throw away. There are some places in Granite Bay that I do not like, and there are some places in Granite Bay that I'm like, are you kidding me? This is insane. Get crazy. Granite Bay is, beautiful. Getting philosophical this morning. I like it. Imagine if you become a Bitcoin pro. I don't even think that was the case. I wasn't trying to be a Bitcoin pro back then. It was like, I thought it was really cool. Like I felt like it, because most people might know my story, most not, but like the reason I'm in these kind of realms of markets and stuff is because, I grew up loving adventure, right? And some of my favorite movies were the ones where like they were treasure hunting. They were always like genuinely curious. They were looking, exploring, and trying to find things. So, that's how I grew up. Like always curious about everything, taking things apart, trying to put things back together, experimenting with all types of weird things, right? Like putting this with this and like creating like concoctions with bacon, like all this type of stuff, like magnets, like, right? Like I remember still like in the younger class, I knew about the north and south side of magnets, and my teacher was looking at me like, how do you know this stuff already? Right? Big deal sort of thing. But it was just it was always been very curious. And that's why I kind of went to markets, is because I'm always curious. I'm like, well, what happens if this happens? Oh, the dollar's going up higher. Oh, it's moving with like what happens when there's a rate of change of this speed on this time frame? So a lot of people are like, how do you find this stuff? How do you do this? Like a lot of it is learned from other professionals that have been in the industry. Like frameworks are built by learning from other successful people. But then you can advance from that by kind of experimenting yourself, right? And that's really what it comes down to, like just experimentation, just fun stuff. And that's how I fell into the markets. I love it. It wasn't the money. It was just the genuine curiosity of what drives things, what moves things, what makes things happen. National Treasure. I love National Treasure. I don't know. Are they making a new one of that sometime? Because I love that movie. Goonies, National Treasure. List goes on. You're in Gold River? Oh, cool. Okay. We're pulling back up to the 2 standard deviation move. Nice move here. This is like basically a shot up. It didn't really give much of an opportunity to do any sort of trade for me. And we're kind of pulling back into the area where we ran into some distribution. Let's look at market net flow and 1 DTE. So 6460. We're above that. So 6460 now is that main concentration. So this 6435 is kind of out the window. Didn't get a pull down into that area. And then market net flow, bullish, very bullish. And we started to get convergence back. So maybe if we do reach up higher, 648 on SPY, which is a couple of dollars higher, that's pretty impressive if the market wants to press up to 648. That would be quite impressive. You're welcome, one. Let's get more ICT drama. Yeah. I let it go. the ICT drama.
And just making aware, Trump is still speaking in the White House at this press announcement. He does just speak on the Football World Cup. He does know Russia's Putin may be coming, and Trump does say he's not happy about the strike on the Russian pipeline.
Since 2 sigma is 646, why would we get 648? I don't know if we're going to get 648, but 95% of the time it will close within the 2 standard deviation move. It's probabilities. Remember, it's not 100% probability.
Over the next 2 weeks, they'll find out which way it will go.
It'd be a very rare occurrence to do that, but the only reason why I'd say that it's a possibility, right, would be because that's the upper bounds of this gamma. We do have that overhead. Maybe if we can hold above 646, if we can hold above 646, that can repel us up there. And the reason also would be the flow of the market is just very bullish. 6,500 is a call wall, and it seems like the market wants to touch it at some point.
Retaliatory tariffs does note, thought that was nice, and he'll have another call with Carney soon.
I think the risk grows exponentially trying to play it up to those levels from here, but I don't think it's out of the realms of it, of possibilities.
And Trump says they want to be good to Canada.
Fortunate thing is Trump is talking right now, so who knows what can be said at any given moment. If we go to the upper weekly implied move, that would be quite impressive because we've already came down to the lower, and it's very rare to see a lower tag to an upper tag of a weekly implied move. That's impressive, very impressive. I will say from a swing trading perspective, we're above the 5-day moving average again. So that's positive. We're above a week to date. So even if we over the next few days of trading days, come back in, wedge out, I'd be watching how these turns and how it consolidates. And I'd be just back to looking at more flow to the upside. All right. If we look back here, where are we? Where we're kind of just back in this tight range over here. Bookmap, right? We talked about Bookmap the other day and how there was a level beneath us. Let's see if that's still there. Probably is. But we'll see if it's basically moved or anything like that. That was basically halfway into its range. Or was it 63.35 or something like that? No, it looks like it was... no, there's less contracts there. But definitely not 400 anymore. I won't give it that much weight under 400. And as far as that goes, there's not much as far as just standout orders for me here on Bookmap. A little bit overhead here at 313, or sorry, at 64.95. Yeah, it's just gobbling away. Yeah, if we can eat through this 64.95, it just feels like a clear shot. This is ES though. INTC, Intel, is that, how's Intel doing now? Intel, showing some strength, seeing some pretty decent volume. This thing is kind of range bound. I would be watching this. That's quite the range here for Intel. It's at the north, the upper bounds of it, flagging out. So if this thing gets through this, it definitely opened the door to a 30 level. Got some big volume right here, huh? Is that what put it on your guys' radar? Is just this volume that just all of a sudden came in?
He says in about 2 weeks, Trump that is, he'll know what way Russia's going to go. As he says, he may go one way or another on Russia.
Oh, see, here we go. Let's see what that's going to cause. We'll see. The weekly time frame, this is kind of you can see it's a little bit larger range. And see how it's the upper bounds of the channel that it's in is kind of hidden where it was prior support. Then we broke down now its resistance. We are above the 40-week, 30-week, 10-week. That's positive, but you want to see that kind of curl up a little bit more. So a lot of time to build, but it could be the early stages of, you never know, a markup phase. But as it stands on the daily time frame, pretty clean look. Pretty clean range. You know where your risk is and where it can potentially go. A lot of times with with things like this, you can just be like, I'm going to go for a measured move of one you know, so risk one to earn one. And maybe if you enter early, your stop would be down here and you just play it up to one, you know, just double the range. That'd be up to like about 35. Oh, you're welcome, Cameron. Hope it helped out. Do I think a pullback is still in play or probably not? Yeah, I mean, I don't know if that was like my ultimate conclusion. But I would say that I still think from the perspective of Gamma that we're kind of just going to be a little bit trapped up here. Like, I feel like the risk still grows to the downside as we move higher, and the reward was where we are now. So I want to see how a lot of these names perform after it digests all this news. And see where people start reaching out from a Gamma perspective. We had the Qs flip over, right, on that little trend indicator there. But ultimately, SPYs never did. And SPYs is the bigger one that I track. And what are we doing with Qs? We're kind of just going sideways. We're just going sideways right now. We're not a new high, even though it looks like we can probably get there. But yeah, Qs, the big guys, are consolidating. SPY is breaking to new highs. So clearly we're seeing rotation. That's not bearish. It's bullish. Bearish would be like when everything starts selling off, right? And then it could potentially turn into some sort of capitulation where you have like 95% decliners versus 5% advancers. Just not what we're seeing here. So just keep an eye out for consolidations, pullbacks, and obviously event risk. Event risk can do this. You got a lot of cash on the side generator. Yeah, and there's a lot of names that like have been quiet, right? We've been talking about quiet names, right? Just because the market's going up, there's been a lot of names that might get more attention, right? Yesterday we talked about Burke, or I put it on the trade ideas. Like this is getting quiet. Nobody talked about Birkenstock yesterday. I doubt it, right? Boom. Because why? It's been consolidating, and now today it's up, 4.7%, breaking out of a consolidated little pattern. Mara, people were freaked out about Bitcoin. Right? I get it. Crypto. Crazy. But this was pulling into a key area, and this is, seeing a nice little pop today. And then a lot of these energy names got quiet, right? Oxy, that was one that I mentioned again. I took a position in Oxy. See where it goes. If it breaks back down, I'm out. But if it keeps going, woohoo. Costco's down. Oh, poor Costco. Yeah, you can see it's a little distribution-y over here. But then again, it did that over here too for a while, for a long time, right? This literally went sideways for 567 days before breaking through higher. And that was after a big run up. Boom. So this was a huge run up. So would you be shocked if, this goes sideways or down to up and whatever for another, June of next year? I mean, it did it here. Give me a second here. All right. This is looking good still. Getting pretty tight here for those shorter term scalpers. This thing is just up, man. Market flow. We're up at that 2 standard deviation. I think I'm probably not going to do any trades because I haven't done any trades since this morning, other than just reducing some and then some day trades. But I don't think I'm going to be pressing limits here given the context of the timing and going into a weekend. I just kind of want to enjoy it. Am I concerned about the overhead structure in Oxy? I'm not.
Trump's decision on Russia will be important.
I think that'll have a play for sure, but
or nothing.
I'm not really worried about it. And the reason why I'm not worried about it is because I'm not looking to hold on to this for years. This was just a trade out of a tight contraction. So if it breaks down because of overhead supply, I'm out, right? But if this goes up a little bit higher, I mean, that's a great trade from down here, right, to $50. Like that's 11 or 12% and could be a very quick amount of time. And I'm just going to update my stop, right, to break even. So yeah, the overhead can have an effect, but right now I was just looking at this tight contraction. And if it broke out in my favor, awesome. But if it broke down, like I'd be out. So I'm not really too concerned about it at all. Actually, I'm really not at all. There's a lot of overhead supply, and they're declining 200 days. So it needs a lot of work. That's for sure. But the approach on this one was to be just kind of quick and agile. That's all. That's when you bought Costco. Hey, if you held it all the way from back then, you're doing really well in Costco. Thoughts on Roblox, RBLX? Little choppy and sloppy right now. It broke this really steep trend from like $40 to 130. Things are getting kind of out of hand in a lot of these names. Like I saw Newegg the other day. I tried to short it. Couldn't get my short in. They wouldn't allow me to short it. I guess they just didn't have shares to short. But like, look at this thing. This thing went from like $5 to $137. So I was trying to short it up in here, but it wouldn't allow me to. They didn't have the shares for me to go short. There was another one, Zep. Like this looks like a short. Like, so if I was to, and the reason why I say that is because this is like, these are crazy moves, and I can take on small positions, because if a small position were to come down, like this thing would, like what, it comes back like halfway, that's 29% down, $11 per share. Like I don't need big positions in things like this if I were to take that short. But I did try on Newegg the other day, and they wouldn't let me, I couldn't do it, so I was like, whatever. But the reason why I say that is because a lot of these names have just been going, yeah, just bonkers. Like stupid. SSF. I don't want to talk about the scanner, not yet, because I haven't really. I don't. Like, yeah. No, I'm not ready to talk about it yet because it's a little intricate, and then it'd have to be another day when I can kind of clarify my thoughts on kind of what it is that I'm doing, because it would have to get a little bit. If I start talking about it, like, well, what's this? What's that? Like, it's going to be so many open-ended statements, because it is looking at a study, and then it's using intricacies in the studies to pull it. And yeah. Stay away from the dark side. Come back to the light, Mike. I know, huh? Ugh. No. TDY? What's TDY? Teledyne. Yeah, this looks pretty clean. Earnings was kind of a crazy day there, but yeah, coming back pretty nicely. And it was a nice breakout here. Yeah, this is great. Some of these names, man, just killer moves. KR, is that Kroger, right? Kroger. I think Kroger, I was originally looking, when was it? I was looking at some sort of a flag pattern. It wasn't this one. I mean, I was looking at this one too. I think it might have been over here. Can't remember. Right now, it's going sideways, right? Just choppy. Not a clean look. This was this just, I don't know what this was. I brought it down, maybe some sort of news, but just kind of a lot of sideways price action. It needs to get tighter for me. Yeah, I did see Campbell's Soup. What is Campbell's Soup? CPB? This one looked, I mean, this is in a downtrend, and earnings are around the corner, but
note for Boeing, a union official says Boeing defense
getting pretty tight. Like, this action's getting pretty tight, and this looks pretty good. So is this trying to build some sort of movement, to get out of this, down channel? And you're seeing some pretty strong volume on occasion come through here, kind of peek its little head. But overall, like, this thing's got destroyed. Campbell Soup Company got absolutely hammered, and it's in a horrible downtrend. So you got to think about that. But there's a little pop up there. And then something like Grocery Outlet Bargain Market. Like, look at this thing. Earnings move, sweet consolidation. This looks, it's flagging an earnings move. It's near highs for the year. Also getting some attention. And this is coming from a huge downtrend too. So Grocery Outlet Bargain Market.
For Intel,
Grocery Outlet. Barter
No,
market.
they're considering Intel deal for 10% equity
What
stake.
about Dollar General? This one, we were watching these bases build for a while, and then they finally broke. And look at it now, like, right? It's just kind of consolidating once again. DLTR. Look at. We were watching these bases back here. It went from, breaking out of this base, haven't even looked back at 47%. You can't tell me there aren't opportunities in these names. Like, that was crazy breakout. What's going on with like some of the other retailers, like 5? That's it. That just hit new highs today. 5 below. BBWI, Bed Bath and Body Works. Let me clear all this out. This one's been a mess, but you do have a higher low building here, breaking kind of a little bit there. And you have earnings around the corner here for something like this. What other retailers? You said IoT. We can pull up IoT. Some strength today, like a lot of the names, though. But it has. Is this just moving with the market today? So if the market goes down, is this going to go down further?
And a bit further here from Trump, it does note Intel said yes to the 10% stake.
So Intel news. So Intel pulled back, and this thing's kind of moving here, and volume is quite positive. So yeah, man, who knows? This thing could fire off. Intel's looking pretty strong with all this talk. That'd be a big move. 25 to, oh, well. Yeah, that'd be a pretty big move. This strong move, and then it kind of just drained out, low volume, and now we're picking volume back up on the upside.
One.
NQ coming off a little bit here. Still getting hung up at this JPM collar. The original one, not the updated one. That makes me want to actually trade Intel. I'm gonna hold off. I had a good day today. I'm not trying to like jump into anything. You said Pepsi. Let me take a look at Pepsi. I know the more I look at this, I'm gonna be like, I'm like biting my fingernails right now. Like, dude, it just seems good. But I didn't really have a plan set up for that. So yeah, Pepsi, that was, that kind of looks like Campbell soup. I was like downtrend, consolidating tightly, earnings broke it out, headed higher. This one's also been smashed. What about like Hershey, right? Hershey was another kind of consumer staple that was beaten down. That's actually kind of coming back here too. Well, this doesn't look all the greatest, but you're about to log off for the day. I think I am too. Nice, Bobby. That's insane. Awesome. Will it be on the Discord eventually? I don't. Maybe it might be SSF. I'll keep posted. I'll keep posted on it. I'm still kind of working through some of it and running some tests. But a lot of the trade ideas recently were all posted from. Like, it's not like it just pulls the names perfectly and you can trade every name. You got to kind of like still look at the charts and everything. So it's not like a huge thing. But the trade ideas that I've been posting recently were coming from that scan. Amongst other ones, like my trade ideas and my tight list. My tight list, I meant. Yeah. Go get some cheap vino. Go got some cheap vino. Vino. Grocery outlet, cheap vino. Long-sided, but your VXX hedge got destroyed so badly. Well, hey, that's fine. Your hedge is supposed to not work.
Just a bit further here for Intel via WSJ. It does note the US government won't be on Intel board or play a major role in governance.
So that's the thing, like with hedging, is in theory, you hedge to protect something. Like that's the hedge. So you don't actually want your hedge necessarily to work, right? In theory. Right? You want your hedge you're doing it as protection, and you don't want to have to rely on that protection necessarily. I mean, there's ways you can think about like, well, but if it goes down, I can take the profits of this and maybe it turns back around. But yeah, but if you do that, what if it keeps going down and then you remove your hedge and then you get destroyed. So in theory, like the hedge is there to protect you. For me, for my hedge, I typically just go more cash, right? So just the way I hedge recently, it's what I do. I'll reduce some of my position sizing, and the more cash that you have in the portfolio, the less volatility, obviously, there is. But BAC, let me see. BAC, yeah, these financials. Look at that thing. Yeah, financials, new high. This is great. Look at it. Extend to the right. Breaking out to new highs. Watch consolidations. I'm sure that WFC probably started making a move too. Yeah, started. Probably a lot of good little bank names there. LEU is now up 8%. Let's go. Hello. This thing is cranking. Mara. Got positions in LEU. I got position in Mara. Oxy's up 2.85%. I'll take it. I think I have ENVX. That's not doing much. I have PCT. That's up 3%. I'll take it. Yeah, I'm kind of the same way, Juan. That's what I do. All right, y'all. I think I'm going to call it quits here for the day. I'm looking at the markets, still holding up very strong, right? So if you've been trying to like really short this market, maybe catch some points down to the downside here when we broke this, but this is a bull market, like this, or this is a very bullish day at least. And it's still, I guess it'd be a bull market too. It's not a bear market if the S&P 500 hits new highs, right? Right? Eventually there'll be a top of some sort. There's been a lot of fear. By the way, fear is getting a little bit exaggerated in my opinion over here, like on this day. Like, I literally saw posts of people saying good night to the bull market.
Being asked on
I was like, yeah, no, I doubt it.
There, which of course took a noticeably dovish stance, and he does know it is still too late. They should have cut rates a year ago.
Got a couple little words being mentioned about Powell. Trump talking about Powell and the Fed cutting rates. Flow, yeah, bullish. Yeah, I mean, there's no denying that this has been bullish all day. From way back here, from way over here, turned green. Then we went through a consolidation, no convergence, but still very bullish. We started getting back convergence, started one going up higher. We are at that 2 standard deviation level again, right? Kind of running into that from a probability standpoint. You would think that we'd close under that level today. Given a context look at the SPX net gamma for 1 DTE, 6475 is kind of where we're at right now. So it's kind of in its happy place. And then we have this above levels of the JPM collar, or the call wall of 6,500. So I think we're going to get kind of like caught up in this range, and then we'll see what next week brings. Perhaps if Trump says something the market likes, maybe we can push through it a little bit, but then I would think that we come back into 6,500. And yeah, that's all I got for today, everybody. What do I got planned after this stream? I gotta watch my kid. So my wife is gonna be leaving town a little bit later. So I'm gonna be watching him and hanging out. Probably get some lunch, some food, get a little bit of air. And then after that, I did want to put together a market brief, but I don't know if I'll be able to pull that off today or not. So maybe through a snap, if I can put something together, I would like to do that. And then just head off into the weekend. That's it. Does MEWTOS scammer base on 10 week? Based off 10 WMA? No, it doesn't. SF. Oh, the scanner. Yeah, no. 6,500 into pullback. 6,500 into a pullback. I mean, if we can get up there, I would like to see it go through 6,500 and then maybe do like a shorter term, like intraday trade on my like prop firm stuff back into 6,500. But I'm not gonna. If it happens today, I'm not gonna do it because I'm not paying attention. But thanks, Bishop. Don't spend that $29.99 all at one place. It's gonna be a good lunch though, a real good lunch. All right, y'all. Thanks again for the super chats. Once again, you guys didn't need to do that. And then thanks for just the commenting, being here today. And if you like this type of content, like make sure to like hit the thumbs up, do that. I don't know, press the share button, even if you're not sharing it to anybody. Maybe that helps. Maybe not. I really don't know. But That's what helps me keep coming back is the growth of it. So in the meantime, I did take some notes on the Evergreen content. So if you have any other ideas of like what a video you might want to see or something you want to learn about, I guess quickly write them down now in the chat, and I'll give it a few moments, and then I'll copy them over. But I did get a few of them, a few ideas. If I didn't capture it or mention it, do it right now. I'll give it till 11 a.m. So for a few more minutes. Hey, what's up, Barkster? Malo, have a great weekend. Some Dole Whip for Mini Mike. Yeah. I love that Dole Whip, that pineapple Dole Whip. See you, Juan. 2026, you say the year of the beer. Maybe, it could be. You have a good weekend too, David. Thanks, Racing. Thanks, Cameron. Thanks, Tech. Mav. Is CLSK as good as Mara? I don't know anything about the company, but the setup is pretty tight across the board on both of them. I mean, these are really pretty tight little contractions. So if you're playing this, you have a stop down here. I mean, it looks like it has some potential to move, right? And if it gets below these levels, then you can just get out and see what happens. Not right now, David. I just have one prop firm that I'm trading with, and I am copy trading, but it's all within that prop firm. You're going to your first baseball game? Sweet. Have fun, Varma. Thanks, Options. Have a good weekend. Thanks, SPS. You're welcome, Sam. You have a great weekend, too. See you, Lakeside. You as well, comrade. Appreciate it. Will the Fed cut rates in September? Probably. It looks like they will cut in September. Let me go to the probabilities. The probabilities are suggesting a cut in September. 87% probabilities of 25 basis points. So seems likely. What happened with Tradeify? Nothing. Got my money. My live accounts, I did not do trade good with their live the live rules. So I traded much better on my swing trading. But Tradeify, I maxed out on sim profits, and now they only allow for live trading. So I went to another prop firm to run up to use their, sim accounts to see if I can kind of run it back again, Keith. And I'm doing one that's kind of similar to TradeFi. I'm not mentioning it now because I haven't received a payout from them. And then as far as like the personal swing trading accounts, been very, very, very good. So I actually took a payout of my swing trading account just the other day. I was pretty happy about that. Yeah, that's about it. That's all has been going on. The live transition, so if I was given the opportunity to just pull all the funds out right then and there, I definitely would have done it. But the live transition, they limit the risk. The amount that you can make dampens more because it's built to protect these firms, right? If they kept on letting me make sim profits, I could have kept this thing going for a while, right? And just kept going. But the moment that they switched to live, it's like their hedge, right? It's their protection. By swing trading, I mean like in my personal accounts with my real money. So when I moved to live, what's the point of trading live with a firm when you could just like you make 80 grand? Why am I going to trade with 20 grand over there in a firm with all these rules and restrictions? So I just press limit, see if I can do anything with it. Couldn't do anything with it over the last couple of months. And meanwhile, during that time, I was doing very good at my swing trading. So now I'm going to try to run it back very slowly. I guess I'll share it with you. Let me see if I can bring it up. Give me a second here. I don't know if this is going to expose who I'm using to trade with right now, but I don't feel like talking about it only because I haven't received a payout, right? That's the only reason. If I get a payout, I'll talk about it because I want to see the process before anybody's like, oh, he's using this. Like, let me go. Whatever. Okay, so I'm only going to show details of one of the accounts. I'm trading 5 accounts, so just times everything by 5 if you see it, okay? Give me a second here. Why does this look like this? What is going on here? And by the way, if there's any Evergreen content ideas, let me know now. Okay. Okay, so here is the account that I'm trading with now. I think that I don't have any words on there. Okay, cool. Okay, so this is August. I started in August here with them. It's been going fine. It's been going good. I'm doing this with 5 total accounts, but it's only showing one account at a time because it doesn't do them all together for whatever reason. So whatever these numbers are, times it by 5. I'm trying to do exactly what I did with Tradeify, but over here. And if it works out, great. If it doesn't work out, I'm out. Some money, obviously, right? That's the risk. But there you go. The one that I just shared was a prop firm, but swing trading is definitely my own personal money. Yes, Savage. You've used almost most of them. Cool. Yeah, Cameron, I never really considered it either, but remember what I was saying, if you were here when I was talking about like my experience with like about to do mining, and then I talked to people and they said, don't do it. Well, a lot of people told me not to do it. And I was like, I'm not going to listen to these people this time. It seems like they have a strong opinion, but they didn't do it themselves. So I was like, in my head, I was like, well, we're building a backyard right now. If I can use $2,500 of my own money and put it in a prop firm and follow their rules, and I have the potential to make money, cool. If I lose it, I'm okay. I'm out $2,500, which I know is a lot for a lot of people. For me personally, if I lost $2,500, like I'm not gonna lose sleep over it, right? It'll bug me a little bit, but it's not like I'm not gonna lose sleep over it, right? Because I have savings and it's not really taking anything away from my personal trading accounts. So I thought, okay, I can do this. I'll use their leverage, and if I can ramp it up, cool, right? Do great, hopefully, right? That would be the goal. And dude, I did much better than expected. It was during a perfect window of when my trading strategy worked, and yeah, I used those funds. I mean, it was spent money already. Like I made the money and spent it pretty much before it hit my bank account. So now I figured, let's try it again, and that's about it. And I would just say that if like for me, like I did really well there. So I don't see why you would ever want to use one of these firms to trade live at. That to me doesn't make much sense. But to utilize them as a tool to leverage and use their sim profits, cool. But I do not care about their leaderboards. I don't care about like that or getting attention. What does that matter? What's that going to do for me? Nothing, right? It ain't going to do nothing. Especially if you're restricted on when you can take out payouts on some of them, or you have to hit a certain amount of time in a certain amount of days, or trade a certain way. You've proven yourself already. Use your own money, trade. Whatever. What other prop firms are you using? The tick chart? Yeah, mainly Savage. It was the tick strategy, and it altered a little bit as time progressed towards the end of it because I was kind of just like really trying to move the process along, but it was mostly the tick strategy, and then utilizing VWAPs and just looking for extended moves, like looking at, in a way, HER, but more visually. What do I think about Clean Spark? I never heard of it, so I couldn't really comment there. Well, I don't know if it's even leverage that they allow me to use, Cameron, because it's a prop firm. It's like you buy their little challenge in the sim account. So you're like trading a sim account, right? So, but you're given the opportunity to like make a lot of leverage. Like, so $2,500, right? I paid $2,500 to get into their account to trade fake money, basically, with the opportunity to potentially get paid out, right? And $2,500 was 5 of the top accounts. I got paid 80 grand. Under that, right, 90% of that, so whatever that is, they paid out a total of $80,000 in sim profits to me. So I could not, with my own money, take $2,500 and turn it into 80 grand in 80 days. I couldn't do it, right? Because I just couldn't do that. It would take me much longer. I don't trade that way, but with them, that's what I mean by leverage or whatever. For the firm right now, David, I'll talk about later when I get a payout. I haven't got a payout, so I don't want to talk about them, because if I talk about it right now and everyone signs up and then all of a sudden I try to go for my payout and they don't pay me, I'm gonna be pissed. And then I feel like I led people down a wrong path. I want proof that they're gonna pay me, because there's always that risk too, that they close shop, that they're illiquid. I don't know how these companies work fully, but Tradeify, I mentioned it because they were quick, they responded fast, there was good support, and they paid me. That's what matters to me. So. All right, I stayed past my 11 o'clock a.m. Everyone, just focus on what you can control. That's the last message that I want to give. Focus on what you can control. It's not the narratives, right? It's the risk. What you're buying, when you're executing it, how much of it you're buying, and then when you sell it, okay? So you think that I'm using them? I am not. Maybe I am. I don't know. I guess we'll find out if I get paid. I still got a long time because I've been trading pretty slowly. So, all right, y'all. I'll see ya. Goodbye.